All right. Hello, everybody. Welcome back to another episode of the Sunday Market Futures. We're live 2 minutes early. We are here and we are getting ready to get back into another week of market action. This is going to be the third trading week of August. Hope everyone had a great weekend. Got some time to relax, enjoy, de-stress a little bit from pretty much all the issues that anyone could have in life. I know this has been a pretty busy week for me just with the move into the apartment. I got to go back to the apartment yesterday, finished up moving some stuff. So September 1st will be the official live stream to open up the new apartment, open up a new studio. I was testing some different backgrounds yesterday. I'm seeing some stuff I like, so we're still working on it. And I think we'll get to something soon. But I hope everybody had a decent weekend. Also, Miami is this week. Well, next week, technically. Next week starts tomorrow. So very, very excited for that. I'm going to be seeing a lot of you guys in Miami, and this is going to be a fun one. I was talking to the bar owner today, and we're getting everything set to go and ready. So August 23rd. October, hopefully we do Vegas. It'll be fun. It will be excited. There's only one background. Yeah, dude, maybe we go back to the bricks. I'm not fully sold on some of the different things I was playing with yesterday, but I got to see. I think we're in the experimental phase right now. But yes, you guys will get a tour. It'll be fun. It won't be a market stream either. It'll be a Labor Day stream. So we'll be able to just talk and have some fun. And then September 2nd, we officially start streams in a new era, in a new apartment, new background. And that'll pretty much be getting us into the last 4 months of the year. Dan Ives does like Nebius. Dude, this guy Nate is obsessed with it. I didn't even get to introduce the news. He's over here spamming it in the chat. Yes, we'll talk about this. Dan Ives has introduced a couple of new names in his Ives AI Revolution list. CrowdStrike, Roblox, GE Veranova, and Nebius. So you got cybersecurity, you got gaming, you got energy, and then you have data centers. This guy, bro, this guy freaking loves Nebius. So yes, Dan Ives is now bullish on Nebius as well. Thank you all for being here. D Visual Arts, what's up? Nathan, what's up? Tappin Productions, thank you for the $2 super chat. W Miami Meetup is going to be a movie. I think it's going to be fun. I think people will enjoy it. We'll take a lot of pictures, a lot of videos, and we'll share it all after it is done. Elaine, what's up? Soham, Diane, Engineering Adjacent, what's up? What's up? Michael, Brandon, how dare you be 2 minutes early? Dude, this was a productive day for me. Okay, I got a lot of stuff done. Got things that I needed to get done. Did whatever errands I needed to do. Your boy got a mani-pedi. It is, you just feel a little better. You just feel a little better when the nails are looking good. It is what. So it was a productive day. So I thought, you know what? I'm ready to go. Camera's charged up. Let's get here 2 minutes early, and let's do what we got to do. So I did not take a nap today. I did wake up at like 11 a.m. So I slept in a little bit. I think on Saturday I woke up at almost 1 p.m. So I definitely slept this weekend, but did not take a nap. June, what's up? Ollie, what's up? Brave for you. Hi, Mitt. How are you? Doing great. Thank you for being here. Cactus Jack, what's up? Retail Invest, thank you for becoming a channel member. Happy Sunday to you as well. Mitch, what's up? Top Signal. Dude, okay, I did have a tweet go viral over the weekend that we'll talk about. And a decent number of people agreed with it, but there was also a decent number of people that felt like it was a Top Signal. So we'll talk about that tweet over the weekend as well, and we'll get into it. All right, cool. So we got 13 minutes until the overnight markets open. Again, thank you everybody for being here. Futures are relatively flat. We're not seeing anything crazy in the futures. I got a lot of stories I want to talk about. We're going to wait until the bell or wait until the market actually opens so we can get into some of those stories and spend some time on this stuff. But we'll recap what happened last week before we get into all the stuff I'm thinking of going into this week. These are the futures, relatively unchanged. I don't think we're going to get some major action in the overnight markets. Likely not going to see massive moves to the upside or the downside. It is good that we're green. Again, the biggest thing that happened last week was PPI. That was the day I did not go live, unfortunately. And, if I was live, it would have been like, oh man, this PPI sucks. And we would have seen the pre-markets go red, yada, yada. But probably within an hour into that live stream, we would have been like, wow, this is a nothing burger. And it quite frankly is a nothing burger. S&P 500 all-time highs. The market's really just not affected by the PPI that we saw. And I think that level of aggression, or rather I should say resilience, will continue going into the week. And I have a couple of charts and data points that I want to show everybody as we get into the show. But I don't know, man. It's feeling like if this is a market that is supposed to have momentum it is a market that has momentum. And that momentum is not going away because of August or because of a PPI, which I think is very, very bullish. Like the fact that PPI was that bad and we're still able to hold on, to me, that's not a bad thing at all. Yes, we'll talk about Trump and Putin. We had some updates on that. That could also be a wild card this week if we do get any level of a peace deal. So we'll go deeper into that and see. But we do have a bunch of macro stuff to talk about as well. Now, Jay Powell will be speaking at Jackson Hole. For those that don't know what Jackson Hole is, it is an annual conference they do in Wyoming every year, and they get a bunch of economists across the world to come to that conference. And Powell gives a speech, or whoever the chair of the Fed is gives a speech. And that speech kind of sets the tone for the rest of the year. We have not had a rate cut at all this year. Even with that PPI, the probabilities are 92% for a rate cut. And actually, no, never mind. It went down a little bit, 84%. This number is very volatile. So this number will go very low if on Thursday, Jay Powell is hawkish. Now, the market's not expecting him to be hawkish because we just had a jobs revision of 250,000 jobs that we lost. And so most people are like they're pretty adamant and aggressive, especially people on the Fed in terms of Bowman and Waller that are kind of yelling at Jay Powell to say, dude, enough is enough. It's time for at least one cut. We're going to see on Thursday how Powell feels, and hopefully it's enough to get the markets to recognize that a rate cut will happen. I think we are priced for at least 2 rate cuts. If we don't get one, it's going to be not the best. Bank of America says we get none. Goldman Sachs says we get 3. So we got to see what ends up happening, but that's going to be one of the biggest things this week. I think that is going to be the biggest thing this week. Quite frankly, I wouldn't be surprised if Monday through Wednesday were flat, and Thursday is when we get a real reaction across the entire market based on what happens with Jay Powell. So that's going to be something that we have to look into going into Thursday. And so we're going to keep an eye on that. But the S&P 500 relatively flat, even in the midst of that. And then this is something I didn't cover. And we'll go deeper into it when the overnight markets open. But because I wasn't live on Thursday, we get data on money market funds on Thursday. Last week, money market funds increased by 50 billion. This week, they increased by 33 billion. So now you've got a record amount of money on the sidelines, 7.19 trillion. Collecting 4.5%. When those rates come down, they're not collecting that anymore. And that could be a catalyst for the markets. But we will keep an eye on that. Money market funds, again, showing that people are kind of scared. Money's going to the sidelines. And I actually think that's a good thing. And we'll talk deeper about that as well, about why it's kind of a good thing that some of this money is coming on the sidelines. NVIDIA earnings is not next week, is August 27th. So it'll be the last earnings. However, we do have earnings next week. And I forgot about this just because I kind of forgot about these companies, but like we can't forget about these companies. This is actually a pretty big week for earnings. Target, Lowe's, Home Depot, and Walmart. These are very important companies because they need to say that we're not jacking up prices, or they need to say consumers are willing to pay the jacked up prices. And there's a sort of like a nuanced balance of how much they're increasing prices versus how much they're eating the cost versus how much consumer demand is going down as a result of increasing the prices. Based on the consumer retail sales data we saw and the consumer expenditures data we saw on Thursday and Friday, retail sales are good. 0.5% expected. It came in at 0.5%. Consumer sentiment was off by a little bit, but again, Michigan only surveys like 200 people, so the market didn't care about that. So now we need Walmart, Target, Lowe's, Home Depot to say, hey, things are okay with the consumer. And hopefully that happens. Oh yeah, Palo Alto tomorrow. I didn't even see that. Yeah, that's a big one. So cybersecurity, that's a big one. They just acquired a company for $25 billion. That's why their stock has been kind of in the gutter for a little bit. Zoom, Intuit, Workday. These are more SaaS companies. SaaS has been kind of for the past couple of months. So we're going to have to see what they say. But the big ones are the retailers, and it'll be very important to see what they can come up with on Wednesday. So there you go. That's what you got. I snack a lot on my computer. I never see Amit snacking. How many of you snack while trading? That's a good question. How many people snack while trading? I don't tend to snack. It's kind of hard to like eat food while talking, especially when I'm talking for 3 to 4 hours. But speaking of snacking, let me show you guys this. So Arnie and Amir are going to stay over at my apartment in September. I told you guys Arnie was coming. Amir will be coming as well. And I sent them this picture today. Oh, by the way, look at my new case. Dude, I love it. Look at this new case. I freaking love it. I feel like if ever I lose my phone, I'll be able to find it easily. But I went to Walmart today and I loaded up. Now, look, I'm not eating all this stuff. This is a lot of just like snacks and junk food and stuff like that. I don't eat this stuff. I want to stock up the apartment because there's actually a lot of people coming through over the next 2 months. Just people that are coming through New York City and they're going to stay over for a bit. And so there needs to be food and like, like random snacks here and there. So I told Arnie and Amir, like, you guys will be well fed, at least on the snack side. So there you go. Matt, I absolutely said you could stay over. Goodness gracious. Matt will be there as well. So he has an open invite to be there. Oh, it is a Robinhood type of case. It is type. Well, Robinhood kind of went back from neon green to like dark green. So it's not Robinhood anymore. Maybe that's why I picked it, bro. Maybe like subliminally, I was like, oh, Robinhood. No, I just wanted a different color, dude. I didn't want black. I didn't want red. I didn't want blue. I wanted something that would stand out. So I feel like this is it. So I learned my lesson from cracking the old phone. I was like, you know what? Maybe I should have it. And you know, it's funny today. I actually did drop my phone. I dropped it really hard, but thankfully it was like an hour after I had the case and it fell flat on the screen. And I was like, wow, if I didn't have the case, brand new iPhone, just dropping it in the middle of a Walmart, you know, that's just, I got to be more mature than that. So thankfully we got the case. And there we go. Let me do a poll in the chat. How are people feeling, green or red for the week? I kind of think the week's going to be flat unless J Powell is actually dovish. And I'm a little concerned he's not going to be as dovish because he's not been dovish all year. So let's see, red or green week. We got the overnight markets opening up in 6 minutes. All right, I didn't put flat. I put red or green. So if you have to guess, red or green. BMNR had a great week last week until Friday, then took a little bit of a hit, but it did cross 71. Ethereum over the weekend, 4,480. Did not get above 4,800, which was kind of the level we needed above all-time highs. Bitcoin did get to 125 last week. Ethereum got really close. Bitcoin did hit all-time highs. Ethereum was like less than 1% away. Bitcoin right here still at 117. It has now been 200 consecutive days that Bitcoin has been above 100,000. So, I mean, pretty damn incredible. You had even, Super Bowls on Bitcoin, like Tom Lee thinking in December, he did an interview saying, hey, maybe Bitcoin goes down to 60,000 before it starts going back up. Bitcoin has not even gotten close to that because of its ability to maintain its momentum. And I think that continues to make me feel the crypto winter thesis might not happen. Simply because of the institutionalization around crypto. Steve texted me today. He's buying more Ethereum. Oh, Steve's coming out with an article soon about BMNR. Let's just say he's bullish. He's bullish. He looked at the option premiums today. He said, look, I think it makes sense. And so the leverage against Ethereum, given he's bullish Ethereum, and he's looking at what BMNR is doing to control 5% of the float, along with the staking they can do. That article probably will be out like tomorrow or Tuesday, but he is getting bullish on BMNR. Best place to get pizza in NY. I think John's on, is this the right one? John's on Bleecker. I know it's a little bit of a basic answer, but I think this is one of the best pizza spots in New York. There's a couple other that I just don't know the name of, but I've been there a couple times. And so as I visit New York City a lot more, because I'll be close to it, I think I'll have, dude, I'm thinking of making like an Instagram account that does like food reviews in different places in New York City. I feel like that would be fun. It would just be like me going to different, because now that I'm moving there, or like moving closer there, I'm getting all these recommendations of food places to try. I'm like, dude, that would be kind of fun to just like go to these like classic diners or really cool sushi spots and steakhouses and like do a food review. So I don't know. Maybe I'll do that. But yeah, I need to tap into my Dave Portnoy, bro. Burnt steak review. Dude, what is your guys' issue with medium well? I don't get it. I really don't. Am I just weird to like medium well? I cannot believe I need to find someone influential who agrees with my opinion, because it seems like everyone disagrees. And it's becoming ridiculous. I'm like, medium well, I feel like is better than medium rare. I really do. So maybe we'll do those reviews. But yeah, John's on Bleakers, I think, is the best one. Okay, so I don't know if Tom Lee diluted on Friday, but he did buy more. He bought more yesterday, I think, if I'm not wrong. He now controls, oh wow, yeah, he did buy. He now controls 1% of Ethereum's total float. Yeah, here's the update. They added 28,650 Ethereum yesterday. And if this is not wrong, this is not confirmed by BMNR, but based on the wallet addresses, it seems like that's the case. They added 500 million today. So now that means they hold 1.174 million ETH, worth 5.26 billion. The market cap on BMNR, I think, is 7. It is 10. Oh, wow. It got to 10 billion. Goodness. Okay. So he's trading at a little bit below 2x NAV, which is good that they bought. Now, I don't know. They had to dilute on Friday to buy the shares or to buy Ethereum, right? Because I don't think they have that money on the balance sheet yet. But if they did, stock was down 4%. Again, no one kind of cared. There's so much volume in this thing that the volume was 59 million shares. The dilution kind of doesn't matter if there's a buyer willing to buy it. And so you had people buy in. Yeah, it went down 4%, but they increased their share of Ethereum massively as a result of that. And if Ethereum runs, BMNR is going to run. So I think that's why Steve's getting bullish. Yes, SBET is below a 1 MNAV right now. SBET got clobbered. I don't even know why they were down 15%, but they were down 15% on Friday. And so these guys got hit pretty bad. That one, I'm not going to lie, from a valuation perspective, looks way more attractive than BMNR. You're paying less than 1 NAV versus, or exactly 1 NAV. Yeah, 1-to-1 versus BMNR. I think it's like 1.9. But then again, SBET doesn't have the Tom Lee premium. And that Tom Lee premium is actually very important, I would imagine, to get people to be excited about Ethereum and Bitmine. So that is what you got with the ETH treasuries. All right, we got 30 seconds until this overnight session opens. I'm not expecting anything super dramatic from it. We got a lot of stories to cover, so we'll get into that after we look at these quotes. About 20 seconds left, and then we'll see if there's any meaningful action here when it comes to the overnight markets. All right, here we go. We got about 10 seconds. Let's see. Again, I'm not expecting anything crazy. S&P 500 is already up about 0.15%, so maybe not a massive move, but some of these individual names that were very volatile last week. We had $2.9 trillion of options expire on Friday as well. We're going to see how those names move. All right, here we go. 8 p.m. The overnight markets are now open. Let's see what we got. S&P opens slightly up. Palantir opens slightly up. Robinhood 114.01. That is also slightly up. Again, relatively insignificant moves. NVIDIA from 179 to 180. That's up about 15 cents. So nothing too crazy. S&P 644. That's up 0.16, exactly as the futures. AMD, that's up 14 cents. SoFi, that one's flat. Google 204.31. That's up a little bit. Grab is up a little bit. Reddit 247. Reddit's been a great stock. Reddit's been a great stock this year. That one's up a little bit, about 50 cents. IREN, that one's up 36 cents. That's up about 2%. And Nubank, also great earnings, 13.17. I did buy 300 shares at 11.93, sold it at 13 after the earnings, but this one not doing too bad. That's up about 0.53%. TLT, that one's flat. Apple, that one's slightly down. Meta tried to hit 800 last week, got to 796. Now it's at 787. So that one not doing too much. Where is the coin of the base? Coinbase, it's up $1. All right, so that's up $1. There you go. I mean, you're not getting crazy movement. Nebius, does this move overnight? This one is up 19 cents. CoreWeave, this one. Oh, by the way, what happened with CoreWeave? The CEO sold 3 million shares of CoreWeave at $98.95 on Friday. So remember, we were talking about the lockup period expiring. It definitely expired on Friday, and the CEO definitely took some profits. So he made about $300 million. I don't know exactly what his cost basis is on the shares, but that is why CoreWeave just got decimated on Friday. But that one is up a little bit. Microsoft kind of up a little bit, $1.68. BMNR, does that, yeah, that trades on Legend, not on the mobile. BMNR is up about $1. It closed at 57, right? Closed at 50. Yeah, it's up $1. 58.70. It's up $1. UNH, this one had a great close on Friday, up 1%, 307. So it closed, I believe, at what, 304 on Friday? Yeah, it closed at 304. It's at 307.50. So there you go. UNH, I think, hit 312 on Friday. So it's still closed 10% on Friday. Now you're getting a little bit more of a boost, which is not too bad. That one is getting some love. HIMS, let's see. HIMS has been kind of flat all week. That one is up about 38 cents, 46.40. Just below 50. Duolingo, that's up a little bit, 332. Disney, 115.57. Pfizer, 25.15. Tesla, 333. Robinhood, 114.15. That closed at, I think, 113.93. So not too bad. SoFi, is that up a little bit? SoFi is up a little bit right here, 10 cents. Open Door, dude. I think Open Door, it doesn't trade overnight. I think this thing could explode. I'm not buying it. I'm not chasing it, but I think it can explode. They got rid of the new CEO, or they got rid of the old CEO. They're getting a new CEO. You got people at venture funds that are tweeting that they're buying call options, like really respected venture funds like Khosla Ventures, which is just like a storied VC fund in Silicon Valley. You had one of the partners say, hey, I'm buying call options. And he shared a screenshot. And he was like, if they pick a new CEO, I think that's like actually good. it'll go up. If they don't, then I'm dumping it. But you got a lot of people just throwing a gamble at it saying, hey, if they get a CEO that's really good, maybe this thing can turn around. I think the business has some structural problems, and I don't think rate cuts fix it. But could it run on hype? Yeah. Could they get a CEO to inspire a lot of this new retail base? Yeah, they could. And that could also create some momentum. So yeah, the reason I think it would explode is because of the new CEO. Now, I don't know what the CEO would do with the business. We got to see what they do. But everyone gets excited when you have new leadership because you're willing to give someone a chance, right? And it depends on who they get. Coinbase right here, 318. But that could help it a lot. Corey right here, 103.30. Rocket Lab, 44.95. That's flat. Lily, 705. That's up a little bit. Verizon, that's up a little bit. Archer, that's flat. GameStop, flat. Intel, that is up 18 cents. It looks like the United States eventually will take that 15% stake and make sure Intel does not die. Dash right here, that's up a little bit. And then Nubank, 13.38. That's actually up 2%. So Nubank, not doing too bad. Yeah, there you go. Not a crazy overnight market. Not to be expected to be crazy. Palo Alto's up about 1%. These guys have earnings on Monday. CrowdStrike's up a little bit. Nothing too crazy. SBET does not trade overnight, I think. SBET, yeah, it does not trade overnight. So you're not, at least not on Legend. I don't think it trades on Webull. Let me check. SBET on Webull. Oh, no, on Webull it does trade. Okay, 3%. Okay, so it doesn't trade on mobile, but it trades on Legend for the desktop. Okay, so that's up 3%. So SBET closed at 1985. Now it's at 20.5. So that is green. MSTR, dude, this thing has been a disaster last week. I mean, you would think MSTR would get some love, and it didn't, even though I don't know if they diluted, but I would have to imagine. I don't think people woke up and said, oh, we're just not going to let strategy run with Bitcoin. I think there had to be some dilutive event. But this one kind of lagged last week. 368 right here. I was looking at the MicroStrategy premiums, dude. It was like you could sell a 450 call for this week, meaning it would have to go up damn near 20%, and you could still get paid $1.47 a share. I was just like, my goodness, the call options and the options market for this are becoming so juicy. One theory that we all had as like a community last week, I think we all agreed, maybe some of that money's leaving and going into Tom Lee. Maybe people just like Tom Lee more than Saylor right now, and some of that money that people use to speculate or for the options on very volatile assets is leaving MSTR. So that could be happening. Apple is slightly flat. AppLovin, that's up a little bit. We'll talk about Stan Druckenmiller. We got his 13F on Friday. So some of you guys that were on the market close, you saw it. If not, we'll review. AppLovin was one of the picks that he continued to buy. And it's up about 0.5% right now. CoreWeave, 4%. Yeah. Now that the insider selling is kind of done, you probably have some people that are more likely to buy some of these shares. So there you go. All right, we'll keep an eye on these overnight markets. Let's get into some stories and see what we've got going on across the global capital equity markets. And then we will keep going from there. All right, cool. So let's start off with this. First, let's start off with this. I think this is actually kind of the biggest story that we need to talk about, and then we'll keep going from there. First of all, on the poll that you guys said, 63% of you say green, 37% say red. So let's talk about bullishness in the broader market. And what does it mean for a market to be bullish or bearish? Now, in general, I think everyone has heard the term, if everyone is bearish then or bullish, then we're at a top. There's too much greed. If everyone is bearish, then we're at a bottom because there's too much fear. So one thing a bull market needs is a wall of worry. And you guys have probably heard this term many times on CNBC as these analysts talk about it. And essentially the wall of worry is a concept describing how markets can rise despite pessimism, despite negativity. Why? Because the more people that are bearish, this is exactly what happened with many stocks that we all own. The sort of like easiest examples I have are Robinhood and Palantir. Palantir, everyone thought it was an evil spy black box company. You needed that fear for there to be alpha. Robinhood, everyone was so upset about what happened with GameStop. You needed that fear for there to be alpha. In the broader stock market, everyone can't be bullish. You need people to be afraid, because once those people start becoming bullish, they put new money into the market. So if you've been in bearish NVIDIA all year, and then at 185, you're like, you know what, it's time for me to buy NVIDIA. That's new money that's coming into NVIDIA. Now, if everyone does that, that could theoretically get toppy, and NVIDIA could maybe go to like 250 overnight or something crazy, right? Like we've seen this happen in the market, and then things become too aggressive. That's exactly what happened in 2021. There was no wall of worry. But now, I think there is a wall of worry, and that's because of this. So this is the AAII investor sentiment, which is the American Association of Individual Investors. They gauge the sentiment of its members towards the short-term direction of the stock market every single week. And as you can see right here, take a look at the week of August 13th. And this is actually in line with the money market funds that we showed. For those that missed it, money market funds increased by 33 billion last week. We forgot to look at that data on Thursday, which means more money came on the sidelines. 46% of the people that were surveyed were bearish last week. 29% were bullish. Now, the 46% is well above the past 4 weeks of bearishness, if you look at it as a percentage of the overall bullish, neutral, or bearish trend. And the bullish trend was the lowest out of the past 4 weeks. So you got more people that are bearish, less people that are bullish, which to me is is essentially building out what we need, which is that wall of worry that is necessary for the market to feel, hey, there is more pain that potentially could come. And you have more people that believe that there's pain that could potentially come, then obviously you're going to see more people that are afraid. That's more money that goes on the sidelines. I think that very clearly explains the 33 billion that came on the sidelines last week, even though the S&P 500 did hit an all-time high. Like, you had the S&P hit an all-time high and 33 billion went to the sidelines. I mean, when you have something like that happens, to me, that's very bullish, because it means there's enough people that are afraid that this market is topping, and you need that fear for the market to not be topping. So there's a lot of top indicators that people want to talk about in terms of Bitcoin treasuries, Ethereum treasuries, Dogecoin treasuries, all this random stuff. And I have also said on the stream, hey, I think a lot of this stuff is very toppy. But at the end of the day, the earnings growth is too good. And when the earnings growth is too good, you do have people, and you have people that deny the earnings growth being so good, which is essentially what we're seeing with some of this money that's going to the sidelines. That is bullish, because you need people to be bearish. And I think that's important. Did I say gouge? I meant to say gauge. Did I say gouge? Did I say like price gouge? There you go. Sunday futures. We need to have a word mess up counter every stream, because I think it's happened at least twice a stream for like the past month or so. It's getting ridiculous. Palantir right there, 178. Yes, I meant to say gauge, not gouge. But the AAII investor survey that gauged investors is showing you there's way more bearishness than there is bullishness. And this is a 4-week trend that's breaking on the red side and on the green side. More people becoming bearish, less people becoming bullish, which is good. I think that's really good to continue to create that wall of worry. So that's what we got there. BMNR, is that moving a little bit? Let's see right here. BMNR, yeah, 59.15. That's up $2. Not too bad. That's up 2%. Hoodie trying to go for 115 as well, 114.75. That one is also slightly green. So that is the first thing I think that's really important to understand. It doesn't feel like everyone is super bullish. You might be hearing a lot of people saying, well, things are too good. Too many people are excited. Not really. One of the most important surveys in the market that a lot of institutional investors look at, Tom Lee has said this many times, that his institutional clients are fighting with him on these Zoom calls because they can't understand why the market would go higher from here. Given you look at the price to book ratio, you look at the S&P forward PE historically compared to the past 10 years. And there's a lot of those things we'll get into, but that is good because you need people to be bearish. So that's one of the first things that I wanted to look at. Now, in terms of what we've got going on this week, and then we'll get into a couple of different charts. Here's what we got. So Zelensky is going to be meeting with Trump in the U.S. tomorrow. We're going to talk about that. July Fed meeting minutes on Wednesday. You have S&P manufacturing PMI data on Thursday. You have the composite PMI data on Thursday. You have existing home sales. We'll talk about the housing market in a bit as well on Thursday. And then on Friday, Fed Chair Powell will speak. This will be one of the most important arguments or one of the most important events that will either build or break the argument on if we get a rate cut. Yeah, it's going to be huge for SoFi as well. I mean, look, if Powell signals that it's likely going to be time to cut, I think a lot of these stocks are going to front run that action. Now the debate is like, hey, do we get 50 or 25? But then we got the PPI data. It looks like we're not going to get 50. I think it's very unlikely we get 50, but we need 25. And if we don't get 25 in September, maybe we get 50 in October or something because Powell wants to wait on more data. But I think Trump would get really pissed off. And not just Trump at this point. I think a lot of Americans would get pissed off because it's time to cut. So we're going to have to see what happens with Jay Powell on Friday. But that will be one of the most important things. Now, the most important thing tomorrow is Trump and Putin, along with what's going to go on with the EU leaders that are coming to the United States. So let's take a look at what happened on Friday. There was a meeting between Trump and Putin, and here is what Trump said based on that meeting. Let me share the screen right here.
We were together almost 3 hours. And it was very extensive. And we agreed on a lot of points. I mean, a lot of points we agreed on. But there's not that much. There's, one or two pretty significant items, but I think they can be reached. Now it's really up to President Zelensky to get it done. And I would also say the European nations, they have to get involved a little bit, but it's up to President Zelensky. I think we are, and if they'd like, I'll be at that next meeting. They're going to set up a meeting now between President Zelensky and President Putin and myself, I guess. I didn't ask you about it. Not that I want to be there, but I want to make sure it gets done. And we have a pretty good chance of getting it done. Warm meeting. He's a strong guy. He's tough as hell and all of that. But the meeting was a very warm meeting between two very important countries, and it's very good when they get along. I think we're pretty close to a deal. Now, look, Ukraine has to agree to it. Maybe they'll say no, because Biden handed out money like it was candy, and Europe gave him a lot of money. We gave him $350 billion. Europe gave him much less, but still a lot, $100 billion.
So the update on what's going on with Russia-Ukraine is that tomorrow you have European leaders that will join Zelensky at the White House. I don't know if they're going to stream this live. If they do, I'll cover it. I would imagine if they have a really good conversation, they will stream it live. We know what happened last time when Zelensky was in the White House with Trump. It was a lot of craziness that was happening back and forth between them. So hopefully this deal, whatever this deal could be, is somewhat meaningful enough to get the European leaders and Zelensky on board, the EU and Zelensky, because the United States seems to be on board. Now, what are the details of the deal? We don't have that many. Trump said in the press conference with Putin, it was a very productive meeting. Many points were agreed to. He's going to call up NATO and Zelensky soon to see if they agree with our deal, and he's going to be speaking to Putin again very soon. Putin did invite him to go to Moscow to continue the discussions, and Trump said maybe he'll look into it. So it seemed like it was a relatively good meeting. Now, one of the narratives there is that, hey, the European leaders are going to come to the White House tomorrow because they don't want Trump to bully Zelensky. Here's the Secretary of State, Marco Rubio, talking about that narrative and what to expect going into tomorrow.
There's concern from the Europeans that President Zelensky is going to be bullied into signing something away. That's why you have these European leaders coming as backup tomorrow. Can you?
No, it isn't. That's not why they're coming as back. That's not true. No, but that's not why that's not true. They're not coming here tomorrow to keep Zelensky from being bullied. They're not coming.
February Oval Office meeting in front of television cameras where President Zelensky.
Do you know how many meetings we've had since then?
Oh, no, I know. And I was just up in Alaska watching the one with Vladimir Putin where a red carpet rolled out.
No, but it was Zelensky. We've had more meetings. We've had one meeting with Putin and like a dozen meetings with Zelensky. So but that's not true. They're not coming here tomorrow to keep Zelensky from being bullied. They're coming here tomorrow because we've been working with the Europeans. We talked to them last week. There were meetings in the UK over the previous weekend.
And they said President Trump was going to demand a ceasefire
as early as Thursday. No. But you said that they're coming here tomorrow to keep Zelensky from being bullied. They're not coming here tomorrow. Oh, this is such a stupid media narrative that they're coming here tomorrow because Trump is going to bully Zelensky into a bad deal. We've been working with these people for weeks on this stuff. They're coming here tomorrow because they chose to come here tomorrow. We invited them to come. We invited them to come. The president invited them to come.
But the president told those European leaders last week that he wanted a ceasefire. The president went on television, said he would walk out of the meeting if Vladimir Putin didn't agree with one. He said there would be severe consequences if he didn't agree to one. He said he'd walk out in 2 minutes. He spent 3 hours talking to Vladimir Putin, and he did not get one. So there's
because obviously things happened during that meeting. Well, because obviously look, our goal here is not to stage some production for the world to say, oh, how dramatic, he walked out. Our goal here is to have a peace agreement to end this war, okay? And obviously we felt, and I agreed, that there was enough progress, not a lot of progress, but enough progress made in those talks to allow us to move to the next phase.
So we're going to see. We're going to see what ends up happening over the coming days. And this is obviously going to be really important when the EU leaders visit along with Zelensky. Now, some of the Axios reports that we have indicate that nothing has really changed from Putin's side. The only major change that was reported was that he doesn't want a ceasefire. He wants a full end to the war. So good, right? He doesn't want a ceasefire. He wants an end to the war. That's something that Ukraine wants, something that the United States wants, the EU wants. Everyone wants an end to the war. For the past couple months, people have been annoyed, mainly Trump, by Putin because he's said he wanted an end to the war, but then he would continue engaging in attacks. However, to get that end of the war, he wants the eastern part of Ukraine, 30% of that region. And that part, Axios also reported, has not changed. And I don't think it would change. I don't think Trump would get in there and be like, hey, you can't get this. And Putin would be like, sure. So tomorrow is going to be very important because the EU leaders and Zelensky are essentially going to begin the conversation with the United States on what exactly they think Russia is willing to give up. And then Zelensky and Putin are going to have a meeting. I think that meeting is happening either early next week or end of this week. It might happen as soon as midweek after they meet with the United States. And that's why Trump said he wants to be present for that meeting. But obviously, that's up to Zelensky and Putin if they want him there in that meeting. So I think this is going to be a wild card in terms of a bull case. Obviously, everyone wants the war to end, but also the markets would be very happy if, hey, NVIDIA, by the way, gapping up a little bit right here, 180.95. If we had more peace and if you had any level of meaningful resolution and we could start rebuilding and there would be more normalized trade relations with Russia, which is one of the things that Russia wanted. They invited like 500 different economic people to the meeting with Trump in Alaska. That would obviously be a good thing for the markets. It would be a good thing for overall peace, and it would be a good thing for not having to deal with that geopolitical headwind going into the end of the year. And so we're going to see what happens. I'm a bit skeptical that we get any type of a deal. I do think that if there was going to be a deal, it would happen now. Like, you got everyone at least coming to the table. You had Trump and Putin already meet. Zelensky and all the EU leaders are coming to the White House tomorrow. Like, I feel like this is the closest we've been to getting a deal. And if it gets done, which Trump is very motivated to get done, you know, there's going to be a lot more momentum on the upside of what it could be for not only the EU and their relations with Russia, because obviously there's still a lot of oil they have to buy from them, but also the United States. And so we're going to see. Russian state media today is saying they want safety for Kyiv and Moscow as well. Yeah, I mean, like, at this point, I do think, and I know everyone has their own alternative ideas, especially because, you know, they run their own sovereign nations, but I do think both sides are like, enough is enough. Like, we've gone through, like, are we going to do this for another 3 years? Started in February 2022. So at some point, you know, one of my first market open streams was actually, no, we started the market open in March of 2022. One of my first like live streams for like 6 hours was when Russia invaded Ukraine. And I remember being live for 6 hours covering that news. That was like my first time covering breaking news. I think at some point, both of these countries agree, all right, enough is enough, and we're going to move on. So if that happens, big tailwind for the markets, very good catalyst for humanity in general and for peace. And so that is one of the wild cards that this week or next week that we could see. Now, remember, September is seasonally weaker than August. We haven't had massive August weakness outside of August 1st. We were down 1.62% of the S&P 500. We have more than recovered from then, and hopefully we can end out August really well. What if a peace deal actually pops up in September, and maybe that's the thing that takes away from some of the seasonal weakness that we tend to get in September? Who knows? Maybe, maybe not. Maybe it's going to happen next year. Maybe it's going to take the next 5 months to materialize. But if it does happen, I think that would be a rather strong tailwind. Yeah, Matt says, I remember talking about it with you guys on Palantir Weekly. Well, that was big for Palantir because, I mean, that's when their software started. Their software got deployed probably within a couple of weeks, but the first public piece of news we got about their software in Ukraine was June of 2022. Stock did nothing. You had Carp take a picture with Zelensky. Stock did nothing. We were going crazy, bro, on Palantir Weekly back in June of 2022. We were like, wait a second. So the software for the company that we're investing in at $7 is being used on the battlefield in Ukraine. The pictures come out. Carp was the first public CEO in America to go to Ukraine and visit Zelensky. And the market's like, we don't care. So it was a big time just covering that entire story and seeing how it was playing out. But I think at this point, both sides agree. It is time for this to end. So that is one of the tailwinds. Hopefully we'll see in the markets going into the next coming weeks. And that's something we're going to have to see in general for how it plays out. Now, let's talk about this bull market. So I showed you guys the AAII investor survey. Take a look at this. This chart I thought was also very interesting in regards to how to think about the macro. So we are in what people would call a secular bull market. And I'm pretty sure people have heard this trade or this term many times. But what exactly does that mean? Essentially, a secular bull market is a market that is not going to have bear markets or not going to have massive, what you would call a traditional bear market because it's secular. You'll have some pullbacks, you'll have some dips here and there, but you're not going to have some prolonged, Great Depression, Great Recession type of 2-3 year drought where there's just massive catastrophic cataclysmic pain. We've been in that secular bull market since 2009. So the last time we had a secular bull market was 1949 to 1968. as you can see right here, from June 1949 all the way to December 1968, it was a secular bull market. If you just look at the chart right there, you had some dips here and there, but nothing dramatic to the point where anyone would say, hey, yeah, we shouldn't invest in the market because the market is a scary place to invest in. And then you had 1982 to 2000, which was another secular bull market. And we all know how that ended. We had a nice little dot-com crash and, we had a bunch of pain. And then the recovery from 2000 to 2008 was not really that much of a recovery, but it was something. You had Microsoft that was flat for those entire 8 years and then continued to be flat for another 6 years. But you had at least some momentum on the S&P 500 right there. And then we had the Great Recession with the subprime mortgage crisis, and that bottomed in February 2009. Since February 2009, as you can see on the chart right here, you've had COVID, you've had 2022, you had certain wars back and forth. Obviously, we had the Iran-Israel stuff a couple months ago. You had Russia-Ukraine, but you haven't had anything just unbelievably dramatic like the dot-com crash or like the what was the other one? The dot-com crash or like COVID that would create that much of a pain. Now, I know from 2009 to 2025, we've had COVID, but that COVID thing was short, right? COVID was like, all right, a month of pain. And then from March of 2020, we bottomed after like a month of February to March going down. And then we had an amazing bull market. And then 2022, we had to pay for it, right? But still, it's been a secular bull market. So the question here is, as you can see right now on the chart, right now, from 2009 to 2025, it looks more like the 1949 to 1968 pattern versus the 1982 to 2000 cycle, which ended with a 114% rally into the dot-com bubble. Obviously, most people would disagree with AI being akin to the dot-com bubble. Some people have opposite opinions. But it seems like we're on track to be more secular than not without some massive run-up into a ton of pain going into the end of whatever this bull cycle ends up looking like. So here's my question to everybody. Do we think this bull market, secular bull market, or here's the better way to phrase the question. How long do people think this secular bull market has? How long do you think this secular bull market has? I'm going to do a couple of different poll options because, well, just looking at math, there's a couple of numbers that we can put out there. So one number is 2033. One number is 2035. You could get even closer and say 2030. And then if you want to be super bullish, you can say 2040-ish, more likely. Let's do 2040 because we already have 2035. So secular bull market, when does it come to an end? What do we think? 2030 would be more bearish. I mean, you could do below 2030, but I think in the next couple of years we'll be okay. But then again, we might not. Or is it going to last a long time? And my answer to this question, which is a hard question to answer, you got people like Tom Lee thinking S&P 500 goes to 15,000 by 2030, is that it's similar to my argument about crypto, the crypto winter. Do we need to have a massive, massive, massive drawdown like the Great Recession in 2008 or like the Great Depression or like COVID, but imagine COVID lasted for years instead of months. Do we need to have that? If we've got earnings growth being better than expected over the next 5 years, 10 years, 15 years, if AI truly is bigger than the internet, and we saw what happened with the internet. Now, obviously, the dot-com bubble was not a good thing, but I think everyone would agree that this market is more than priced for perfection, just based on historical multiples. So the earnings cannot be bad. Last time the earnings were bad, Meta was at 88. You cannot have bad earnings, and if you do have bad earnings, this market tanks. That's one thing I will vehemently disagree with the bears. The bears cannot say, oh, the market's going up for no reason. It's like you can have disagreements around why the market's going up, but you can't say it's for zero reason because the number one reason is that the market expected 2% earnings growth in Q2. We came in at 10%. You just can't expect that. So, and we haven't even had NVIDIA yet. So the question then becomes, over the next 5 years, is there that type of earnings potential, which theoretically, based on AI, there should be, right? Because AI is supposed to increase margins. So we looked at that example last week, McKesson, which does about $360 billion in revenue. If they were to increase their margins, which are right now 1%, by 50% to 1.5%, that's massive EPS growth. And that EPS growth obviously should lead to investors being more excited about it. I mean, Costco trades at 50 times. NVIDIA's at 37 times right now. Does that mean does that mean that NVIDIA is super expensive, or does that mean that Costco or NVIDIA is super undervalued, or Costco is super overvalued? And what happens in the next 5 years if Costco continues to trade at these multiples because people are diamond handing Costco and NVIDIA eventually puts up the growth to attract new capital, and NVIDIA and Costco continue to trade at the multiples they're trading at? Here is my kind of like core take around this, and especially this is similar to the argument for why I don't think crypto necessarily has to have a bear market. Where else are you going to put your money? where else are you going to put your money? It's like seriously, like one of the things I heard this on a podcast this weekend, and I think it's so true. And I think, Steve's been talking about this for a long time. Where else do you put your money? Like, sure, you can put it in gold. Sure, you can put it in money market funds, even though rates are coming down. Sure, you can put it in real estate, and we'll talk more about real estate in a bit. But realistically, the liquidity that the public markets give you and the level of growth, not on the stock price, but on the actual earnings, which then the stock price is a benefactor of, it's hard to find a TINA, which is there is no alternative. I learned that in negotiating 101 when I took it in college. And so if companies like NVIDIA is not going to grow 80% in 2030, and if they do, we are going to like 50 trillion or something. But let's say NVIDIA is still growing 20%, right? Like if you bought NVIDIA today at 4 trillion and NVIDIA gets to 7-8 trillion by 2030, let's say it doubles, are you selling? And if you are selling, then cool. Is someone willing to buy because AI is still so expansive that NVIDIA still has demand? Like we don't have the answers to these questions, but it doesn't feel like there's a meaningful alternative against that type of growth that you're just not seeing anywhere else. Now, in terms of Applied Materials saying some of the CapEx was slowing down, true, you had one company in the semiconductor space saying some of the CapEx was slowing down. But remember, Applied Materials is a fundamentally different company than NVIDIA and AMD. Like a lot of the CapEx that Google is spending on NVIDIA, they're not expending necessarily on Applied Materials. Also, the reason Applied Materials took a big hit is because their CEO said tariffs are actually affecting them in a much more aggressive way. And so they guided with macro uncertainty. They said the tariffs are a little concerning, and that's why investors just got a bit upset. Applied Materials has not really been the poster child of the semiconductor world. Every other hyperscaler, though, is spending more on CapEx. Google increased from 75 to 85 billion. Meta increased from 65 to 72 billion. And then Microsoft guided for 30 billion going into Q1 of 2026. That times 4 is 120 billion. That's up 35 billion from what they guided at the beginning of 2025. So I don't know. Obviously, could we have a massive drawdown again? Of course. And that would be healthy eventually to have that. 42% of you say 2030 is when the secular bull market comes to an end. But I just feel if we've got drug discovery, if we got self-driving in robotics, if we've got humanoid robots, which I'm going to show you guys something on humanoid robots while I'm talking right now, because I saw this and it was absolutely crazy. Beijing had their first world humanoid robot games with hip hop soccer. And I don't know if that has to end anytime soon. And I at the risk of sounding like a permabull, I'm just trying to be very logical here. What is the reason it has to end? The only way it ends in like a meaningful way is if these companies don't show up. This is scary. It's definitely kind of freaky, dude. It's definitely kind of freaky. The only way I think to be like meaningfully bearish is if these companies don't show an ROI. And the beautiful thing about Q2 earnings is we've started to see an ROI in a meaningful way, in a pretty meaningful way. Azure even disclosed their cloud numbers for the first time, Microsoft, because they feel comfortable enough to share that with the market. You have every other company trying to announce a partnership with Anthropic or OpenAI or Gemini to be able to show their AI productivity. And even if that's not showing up in the numbers yet, eventually that's setting up a framework for it to show. Meta showed incredible results with their AI advertising. They beat revenue by $3 billion. This is a freaking $2 trillion company. It's not easy to do that. Palantir obviously showing that AI is having an ROI on their ability to implement inside of the enterprise. Governments are embracing it. Sovereign AI is becoming better and stronger. I mean, there's just enough momentum, I think, we're seeing with AI. And we don't even have personal AI assistants yet. We are not at the point where Siri can do stuff for you. If that is something that becomes real in 2026, which from every Apple article I've read, it seems like that's what Tim Cook is really gearing for. And I think they have to. If they don't do it in 2026, it's going to get pretty ugly. But if they do, and agents really become a thing, how much more productive do humans get along with unsupervised FSD that hopefully should be launching towards the end of 2026? I mean, it just feels like there's a lot of tailwinds. It really does. But then again, you never know how this market plays out if the market feels AI is still creating momentum. But let's say Microsoft in February says, yeah, we just don't need any more chips. I mean, like that, that would not. Now, I think all of us have done enough due diligence to imagine by understanding what's going on that that's likely not going to happen. But if it does, that's a DeepSeek moment. Things change overnight. So the argument is not that you can't predict when a recession is going to happen, or you should say that a recession is not going to happen, because anything could happen to the labor market, unemployment, yada, yada. I'm actually going to show a couple bearish stats in a second about credit cards and delinquencies. And so that could add to the argument for why we could get a recession. But from a secular perspective, those things are bad and they will be dealt with. The overall reason the market is trading at 22.5 times forward earnings, which is up there in terms of S&P forward multiples, is because of AI. And if that goes away, then we're going to have issues. But it doesn't look like that's necessarily going away anytime soon. Dello says, Amit, I found out the construction company I work for uses Palantir the other day. Wow, time to double down. Dude, that's awesome. That is super awesome. Palantir, it doesn't have a lot of construction companies they work with. One of the most famous ones is Lennar. Lennar is an important one because actually Buffett has loaded up on this one. So Buffett is long the home builders, but Lennar, I think, was actually at an AIP con. But construction, there's a lot of ways. Construction doesn't have the best margins. You implement AI, decrease some costs, increase the productivity on certain layers of the stack, and then boom, you have better EPS growth. That is something that will be rewarded in the stock market. And I think that's what the entire market is willing to see across the entire board. Now, the real bear case, this is what Steve would bring up if he was here, is AI replaces all of our jobs. And if AI replaces all of our jobs, then boom, we have a lot of issues. Because then, like the fate of humanity and society has some other problems. And that could be a massive bear case, quite frankly, for the stock market. But if that doesn't happen, then maybe we're okay. Speaking of AI, Sam Altman is getting very, very excited for AI. And the next market that he is planning to dominate, well, one can argue they're already dominating it, is India.
India is now our second largest market in the world. It may become our largest. We've taken a lot of feedback from users in India about what they'd like from us: better support for languages, more affordable access, much more. And we've been able to put that into this model and upgrades to ChatGPT. So we're committed to continuing to work on that. India is...
Right now, ChatGPT has 700 million weekly users. That number is going to get to a couple billion, I think, by the end of 2026. I think ChatGPT is just winning this race. And as much as Elon wants to post about Grok Imagine, which at this point is just becoming annoying, like every other post that he tweets is about Grok Imagine, because he's trying to get people to use Grok, which I get it. And I use Grok. I pay for Grok. I don't pay for ChatGPT. I pay for Grok. The problem is he doesn't have the market, dude. He does not have the market. ChatGPT has the market. And whether Grok is better or not, this is something that tech people care about. Normal people, like my mom, she was telling me how she was using ChatGPT to create some lesson plans today because she works at a school and she works with teachers. Everything she was doing was through ChatGPT. She doesn't know what Grok is. She doesn't understand Grok. And she's on Twitter and like she'll scroll Twitter here and there, but she's not downloading a new app. Everything's already in Grok. So look, I think Grok will grow. I think Gemini will grow, but I think ChatGPT is running away with it. I think they're running away with it. And I think Sam Altman knows that. I think Elon knows that, and he's pissed off. And I mean, Elon should be pissed off. And he should sue them, to be honest. I know he has a lawsuit already. I think he should double down on the lawsuit because it is insane that the guy who funded and came up with the name OpenAI does not have any equity in the now profitable company that is OpenAI. But it does seem like normal people are using ChatGPT more. And the point is, whether they use ChatGPT, Claude, Grok, that really is irrelevant to any of us. That's relevant to the CEOs of those companies. What's relevant to us is that all these companies are continuing to spend the CapEx to get those users and to make their models better and better. And so the stock market wins, whether Grok wins or Anthropic wins or ChatGPT wins. And I think obviously the way to play that is NVIDIA. AMD is out there as well. But if you're invested in a semiconductor stock, you need all the models to be getting better and better and better for that CapEx to continue rising. And so that's what matters for us. But in general, we're going to see which ones actually end up winning over the long term. Now, granted, if OpenAI starts having lack of progress on their models because Grok just has more researchers or Meta has better researchers, Meta I really don't think is ever going to build a meaningful consumer AI product that's going to rival ChatGPT, no matter how many people they steal. I just don't think people want to interact with Meta AI, even if they're on Facebook all day. So they'll get some of the market. I don't think they're going to get the type of market ChatGPT has in terms of the level of daily users that are interacting with it uniquely and on a personal level. But if ChatGPT's models start to suck, then yeah, you're going to probably get other people looking for other models. But so far, even if they suck to you and me, because we're comparing the benchmarks and this 0.5% difference, to the average person, ChatGPT is magic. And as a result, I think that's why OpenAI is probably going to be a much more valuable company. And by the way, OpenAI, they filed this weekend that their employees are selling $6 billion worth of stock to investors at a $500 billion valuation. Like the fact that they're willing to get $6 billion worth of stock sales from employees into freaking investors at $500 billion is incredible. And, that just proves the investor appetite is there. And that's obviously also very bullish for Google. Yeah. Or for NVIDIA. Yes. $6 billion. So $6 billion of stock. This is for employees only. They're going to be, so if you're an investor that wants shares from an employee at a $500 billion market cap or valuation, you'll potentially be able to buy shares from some employees who got those shares at, I don't know, 10 billion, 20 billion. It depends on how early they came to the company. And if you're buying at 500 billion, you obviously think it's going to go to probably a couple trillion for it to be worth your while. But that's what we're seeing with OpenAI. So it's exciting. And the reason I got on this tangent is because this just means this AI market or this AI tailwind is not stopping anytime soon. And maybe when it does stop, it'll all hit us in the face. But as of now, we're not seeing it yet, which is relatively bullish. And one of the reasons we can tell it's not stopping is because of the amount of buying. Take a look at this. Total US ETF and single stock purchases hit 5.9 billion last week. This was even with 32 billion entering money market funds. Still, 6 billion went into US ETF and single stock purchases, well above the 52-week average of 2.3 billion. This lifted the 4-week average of purchases to now 2.8 billion, and institutional investors were leading with buying 3.7 billion, the 10th largest weekly amount in 17 years. Let me say that again. Last week, institutional, that week where we had a little bit of a dip on the S&P 500, we had Bouncer at 177, Robinhood went to 107 or something. I think that was like a Wednesday. Institutional investors took advantage of the generational opportunity with their 10th largest weekly amount of purchases in the last 17 years. I mean, that is unbelievable. Corporations followed with 1.6 billion in buybacks. Retail investors and hedge funds added 400 million. Retail investors at 400 million and hedge funds at 200 million. And individual investors have now bought 33 of the last 35 weeks. So of the last 35 weeks, 33 of those have been net buys by individual retail investors. I mean, this is incredible. This is absolutely incredible. So again, when you see this, you either say, oh, top, or you say, no, it's a secular bull market. It's a wall of worry because I showed you guys the survey of investors that are still super scared to invest in this market. And now you've got investors that maybe have been scared of NVIDIA at 90, at 100, at 110, 120, 130. They see all the China revenue that's coming back. They see Sam Altman being able to raise a couple hundred $100 billion valuation, almost raising 15 billion by himself from the employee sales. And you got some people saying, all right, I was bearish for the past year. Now I'm getting bullish and I'm going to buy some NVIDIA. And that's new money coming into NVIDIA. Now, again, if everyone were to get bullish, then NVIDIA would go up like crazy, maybe for no reason, maybe not in a justified way, and then we would get euphoric. But that's not happening. NVIDIA's been stuck around 175 to 180 for the past couple of weeks. Maybe you got some new money coming in there, but you definitely have some people taking profits. But there's enough of a balance, I think, which is very important given where the S&P 500 is trading, for that to not be super bullish or super bearish. And I think that is a good thing. That stat does not include options. That is single U.S. stock, and that does not include international stocks either. That is U.S. equities and U.S. ETFs. So S&P, VOO, SMH, IVG, and then you have your NVIDIAs, Palantirs, Teslas, Robinhood, etc. So you have all those companies as well. Speaking of options, though, these were the top 20 stocks that were traded in the options market on Friday. Some new names got into the top 5. So you have NVIDIA, Tesla. Those are usually number 1 and 2. Then you had Intel, based on this rumor that the United States is going to buy 15% of it. Then you had UNH, obviously. All the super investors bought. Warren Buffett, David Tepper, Michael Burry, the Saudis. Then you had Opendoor, which, again, if they get a new CEO, that's really good. That one might go on a big run. Then you have Apple, AMD, Palantir, MicroStrategy, Amazon, iBit, Nubank after great earnings, CoreWeave, Google, Meta, Hood, Ethereum, Microsoft, Wolf, because Google took a $3.8 billion stake in TeraWolf, which is a Bitcoin miner / AI data center play. And then you had Google at the bottom. You get retail appetite is strong. Retail appetite is very, very, very strong. And I think we are getting some of that momentum. So this market is built on FOMO. So I think the market is built on bears recognizing that they were wrong about being bearish. Now, FOMO to me is more so buying Opendoor, right? Like when I think of FOMO, I think, let's say Opendoor opens up at $5 tomorrow and it's up like, what, 50%. And people will be very excited, right? And people will FOMO into Opendoor. You might have done that when Opendoor was, I think, topping out at $492 3 weeks ago. And you got a lot of people that are bag holding it, right? That is FOMO. Buying NVIDIA at 37 times when we know NVIDIA is not dirt cheap, but NVIDIA is not like euphoric expensive based on the earnings growth. If you believe they can keep growing that much, that is not FOMO. That is bears recognizing, hey, I need to put money to use because my money being stuck in a money market fund is not exciting. and it's not doing anything for me. And if Nvidia continues to grow, what am I going to wait to buy it at 200? Especially if you're a fund manager managing, a couple $100 million, like your investors are going to be like, hey, what did you do with our money? Like, where's the return? If we put it in the S&P, if the S&P goes up another 10% from here, which would get us at around 6,800. Right now it's up 10% year to date. It ended on Friday exactly up 10%. We've had 2 years of back-to-back 20s. If we get that extra 10%, that would be 3 years back-to-back 20%. That has not happened since the late 90s, from 1995 to 1997. And so I think it's less about the market being built on FOMO, because again, 2021 was FOMO, right? Like pictures of rocks were selling for 10,000, then 20,000, then 30. So we bid it up to the point where I think the largest NFT was, well, outside of Beeple's NFT, which was 69 million. An average CryptoPunk was around $4 or $5 million bucks. That's how much FOMO was there. But you're not buying anything when you're buying an NFT. With Nvidia, you're buying something. And so to me, that feels like lack of FOMO and more so a recognition of, hey, the trend is up. But at the same time, this is why it's nuanced. You have enough people that are bearish. Because if everyone was piling in, then Nvidia would be much higher from here, right? You would get, like, if Nvidia was trading at like, I don't know, 240, 250 right now, I would be a little scared because I'd be like, yeah, you could justify it, but like you're going through a lot to justify it. Whereas Nvidia at 180 is like, that was my price target for the end of the year. That's 450 of EPS with a 40 PE. Boom, you get to 180. It's not that hard to understand. But if Nvidia slowly makes its way up to 200 by end of year, it doesn't feel like FOMO. It just feels like the stock price is reflecting the earnings growth as well. So that's kind of what I'm thinking of this market. I don't think it's necessarily based on a lot of hype and FOMO, even though there is that in pockets of the market. As long as the big companies continue to execute, and we'll get more earnings over the next few weeks or the next few days with Walmart, Target, all those companies. But as long as they continue to execute, I think we are not in the worst situation. Now, let's talk a little bit about some of the bearish points that I said I would bring up. So let me pull this up right here. I gave you guys a lot of bullish stuff. Here is some bearish stuff, or I guess you could interpret it how you want, but there is a bearish interpretation. Take a look at the housing market right here. The monthly supply of new homes in the housing market surged to 9.8 months, which is the third highest since 2008, meaning there is basically 10 months of homes willing to be sold, which is the highest since 2008, right? There's a lot of homes that are on the market. The indicator measures how many months it would take to sell current builder inventory at the current sales pace. By comparison, the long-term median is only 5.8 months. And this is very important for supply and demand, because if you have way too much inventory, that could crash prices, and that obviously could be bad for the home builders. Since the 1960s, 5 of the 6 time builder supply reached this level, a recession followed. This is why I'm saying it's kind of bearish. The only exception was 2022, when the economy narrowly avoided a recession. Now, technically, we had a recession because a recession is characterized by 2 quarters of negative GDP growth. We did have those 2 quarters. That's when Janet Yellen came out and said, well, that's not really the definition of a recession, but if you assume that's the definition of a recession, then we did have a recession. It was just a very short recession. So home builders right now are struggling to sell their inventory. 5 out of the 6 times we got these prices to these levels, we had a recession, based on the historical indicator. So here's the question, and I think, see, this is what I mean by it's hard to be bearish. Let's do a poll right here in the chat. Based on this housing indicator, who thinks a recession is coming up? Now, if it's 80-20 yes, then everyone's, using this to turn this indicator to say there's a recession. But if that's the case, you just sell everything tomorrow, because the S&P is trading at all-time highs. Nvidia's at 180. Like, these are good levels. Take your profits. Who's realistically doing that? 62% say no. Who's realistically saying, wow, the home builder indicator that historically has been accurate about a recession coming is the reason for why I'm going to fade the earnings growth of Nvidia and take my profits? I don't know. I don't think a lot of people are going to do it. Not with Buffett also loading up heavy on Lennar. Again, Lennar is one of the companies that will be pivotal to getting us out of the sort of housing, freeze that we are currently in. And you got Buffett saying, yeah, I'm going long. And I think he also bought a D.H. Horton, if I'm not wrong. And as a result of that, you have, he did D.R. Horton as well. D.R. Horton. Well, he sold a little bit of D.R. Horton, but he bought more Lennar. So he just kind of went the opposite direction. I mean, again, he added 265% to his position. Yeah, Michael Burry as well. That's correct. Oh, Druckenmiller as well. I didn't show you guys Druckenmiller. Let me show you guys that in a second. But you can see right there, Buffett now has 7 million shares of Lennar. That's a $779 million position. And then Druckenmiller, I didn't show you guys this, but this is what he did on Friday. New positions, C Limited, Southeast Asia, Nubank, International, Latin America, Warner Brothers, don't really understand that one, Broadcom, Semis, Bank of America Financials, Microsoft, Tech, and then IWM small caps. He added to AppLovin, Roku, TSM, Delta, and United. And then he sold all of his Amazon, all of his American Airlines, all of his Capital One, and all of his Tesla. So if Druckenmiller's buying calls, by the way, he bought calls on IWM, not just like shares. If he's buying calls on small caps, I mean, obviously he's thinking of rates coming down, which would be very bullish. So is Buffett, probably with Lennar, with rates coming down. But it doesn't seem like, even if the home builder indicator is showing that a recession theoretically could follow if we have 10 months, almost double the amount of home supply that the long-term median average says on the shelf, that you would have someone like Druckenmiller say, well, I'm going to completely sell out of everything because that means a recession is coming. In fact, he's leaning into it and saying, no, I'm getting more risk on and I'm buying calls on small caps because of rate cuts coming down. Do they need to report if they buy crypto? No. They need to, well, I don't know. These guys, I don't think they're allowed to buy Bitcoin and Ethereum in and of itself. I mean, they would buy it through IBIT or like the BlackRock Fidelity Fund. But I've never seen one of the super investors actually disclose like buying Bitcoin and Ethereum. But I don't think they're allowed to hold crypto itself because these funds are like regulated by the SEC. But my point is, this is a recession indicator that is bearish. There's no denying it. But is it a reason you sell? And again, the reason I'm harping on this is because every time someone says, well, we're toppy, yada, yada, it's like, okay, but are you selling? And I kind of think a lot of the people that are yelling that it's so toppy are the ones that just miss the whole market. And they want a really good opportunity, which you got this week with like less than, I think it was 0.5% down on the S&P and people stepped in. Just pragmatically speaking, it's hard to imagine that people actually get so scared unless you have a Liberation Day 2.0 type of event, which would cause that type of pain. So again, not the worst thing about it. And then the final recession indicator, or not recession indicator, but like not so bullish thing I was going to show you guys is unemployment, job potential crisis inside of the 3-month average for youth underemployment. That's now 17%, the highest since 2020. This is nearly in line with the peak during the 2001 recession and the early stages of the 2008 financial crisis. So during 2001 and 2008, you had youth unemployment at 17%. That is exactly where we're at right now. Is that the worst thing in the world? I mean, look, it's not great that youth unemployment is that high. That's kind of similar to China levels, which I think is a little bit more aggressive in China. But is this a reason you sell your NVIDIA? Probably not. It's easy to be blinded in a bull market. I take pride in the fact that on this show, I try to not be blind in the bull market that we're in. Like if we have crappy data, we have crappy data. We have, it's not like we're hiding the PPI. The PPI was bad. We talked about the PPI being bad, but then we looked at the market's reaction. Consumer sentiment was bad. We don't hide any of the bearish data. We just looked at 2 indicators that are not good, that have historically either been indicators that were present during a recession or have been a precursor to a recession. You don't hide the data, but then you logically ask yourself, does that mean everything's going to shit? And if that's not the case, then, I think that's what concludes, or what helps us conclude, that there's a broader bull market in place. So that's what we got. That is what we got. And I don't think that's the craziest thing in the world. We don't have enough red days. Well, I agree with you. We have not had many red days. But again, that goes back to this argument that this is a simple argument we've been making for the past couple of months. One of the reasons is there's too many institutional investors that won't let a red day happen because they're going to take advantage of the red. When you have a lot of money on the sidelines and you get the S&P 500 go down 1%, and that money thinks that, hey, this is our opportunity, it's just hard to get super red. Like for NVIDIA to go from 180 to 150, that would be a meaningful decline. That would be almost 600 billion in market cap that it would lose. Like, what is the catalyst to get that to happen? Does it have to happen just for the hell of it so we can say we had a red day? Sure, but if that does happen, you're going to have too many people buying the dip at 175, at 170, 165, 160, 155 before it even gets to 150. Unless you have a liberation day or you have a deep seek. And we had 2 of those this year. This is the other thing I think a lot of the bears forget. We had 2 of those this year. We had a horrible DeepSeek event that questioned the existential reality of AI. in all reality, it was nonsense, right? And all of us, if you bought the dip, then you got to benefit from it. But none of us even really knew what was going on. But we just saw the most valuable company in the world go down 40%. And then you had Liberation Day, where it went back down even lower to, I think, 86 is where NVIDIA bottomed back in April. Worse than what we had from DeepSeek. We had two really bad events this year. And so for everyone saying we need to have a third one, it's like, well, dude, every year since 1950, we've had 10% drawdown every single year. Every single year we've had at least 1%, 10% drawdown. In fact, last year we almost avoided it, but then it happened with the yen carry trade. And literally we went down to 507 on the S&P, which matched the technical definition of the 10% downtrend. And so there you go. You had your 10% hit based on the yen carry trade, which lasted for 5 hours. We've had two of those this year. So, I mean, I don't know if we need to have another one. But time will tell to see how this ends up playing out towards the end of the year. Aren't mid-years always bad for the markets? Yes, but midterm year is next year, 2026. So yes, historically that is correct. Midterms, we'll do a lot more digging into what to expect in 2026. And we're going to do a lot of content in December of like portfolio planning for 2026. Because I've been thinking like, look, let's say we end out with a really good year for 2025. Let's just cross your fingers, hope a lot of us are up a lot of money. Let's hope that holds into 2025. Hopefully, it goes up from here. But if we can at least hold what we are all up going towards the end of the year, I think we'll be happy. I think the number one concern for everybody, including myself, is going to be how the hell do I not lose this in 2026? And so we're going to do a lot of stuff around portfolio planning. And I'm going to try to get a lot more people to get their perspectives on what to do in 2026 from a hedging perspective, from a diversification perspective. But yes, 2026 is technically supposed to be bad based on the midterm year thesis. Midterms always suck. 2020, 2022, etc. Does that have to happen? Well, 2020 was an election year. 2022 is one of the more recent ones. Does that have to happen in 2026? I don't know. And again, if everyone's expecting in 2026 for us to have some horrible recession because of the midterm indicator, which we've denied a bunch of indicators this year already, right? So what's to say we can't deny another one in 2026? Then that's more of a wall of worry, which is good because that wall of worry creates more fear. That fear is something the market can climb, which is not the worst thing in the world. So all in all, the point I'm trying to make is that although it feels like there's a lot of momentum and things are toppy, is the earnings growth enough to say that things are actually toppy? And as of now, it doesn't seem like that's the case. Now, speaking of toppiness, I made a comment that some of you guys might have seen. This tweet got like 500,000 views over the weekend. And there was definitely some people. Well, I did say it was a hot take. So you needed the hotness of the take to get people riled up about it. But my goal was not to rile people up. This is genuinely what I think. So I'm going to put a poll right here in the chat. And we'll end on this and see what people are thinking about this perspective. So here was my hot take. So this Twitter account said, is now a good time to buy a house? And I said, the American dream is no longer owning a home with a 30-year fixed rate. The American dream is owning a sizable position in NVIDIA, which is a metaphor for the stock market, particularly AI, because that is what will be growing over the next decade, not housing. So here is my question to everybody. Is the American dream a home or the stock market? I said NVIDIA, but it's more so just like a metaphor for owning things that are actually going up in value versus houses, which is, we've got 10 months of supply. You could see home prices start to come down meaningfully. It doesn't have to. It depends on how the Fed navigates it. But NVIDIA, I think, is insulated from the housing market, unless it really causes a recession, obviously. But if that doesn't, then you've got something that's growing versus the housing market that maybe will grow 3 to 4% a year if it does well. Wow, 58% of you say stock market. Now, look, I am sympathetic for those that say a home, because a home is valuable, right? You got a place to live. You own equity in something. You have a house that, like, NVIDIA could fall because of DeepSeek. Your home, whether you have a 7% fixed rate on it, unless there's some natural disaster, your home is your home. That's not going away, right? It's land. There's only so much land on the planet. And obviously, if you have a family and kids, this also makes the conversation a little different, right? If you have a wife and kids you have to support, then you probably need a home to support them in. But the broader argument here, and I asked this question to my mom, and my mom actually said the stock market. And my mom said in her generation, she came from India with my dad as immigrants, the goal was family and home to create security. And she's like, for my generation, and she's been seeing this based on some of the kids that she talks to in her school, the goal is not a house. No one cares about a house. People care about the markets. People care about crypto. People care about investing. People care about getting returns and opening up brokerages accounts to be able to build equity inside of an asset that they think is going to perform. And so, yes, this question might seem like a top signal, but personally, I don't see the value in putting a down payment on a house, at least from my perspective. Again, I'm a single guy at 28 years old who lives in a place where if I do buy a house, we're talking about $800,000 minimum to like get a meaningful house in northern Jersey. It's kind of ridiculous. I don't see the value in property taxes. I don't see the value in maintenance. I don't see the value in actually dealing with what it takes to be a homeowner in regards to not only all the insurance you have to pay, but also like when the toilet breaks, you're responsible for it, all that stuff. Like, I don't see the value in that, and selling my NVIDIA to do that versus having a sizable stake in the stock market if the stock market can continue to appreciate at these levels. Now, let's say the stock market's a dud for the next couple of years. Well, if housing's also a dud, then it's a wash. But if housing appreciates more than the stock market, then housing's probably better. But we're talking about dollar for dollar, right? Which one has the ability to grow over the next 5 years? Do we think a house that you buy right now that you're tied to will grow more? Or do you think NVIDIA, right? I think that's the question. Now, I got a lot of perspectives on this, and I see a lot of perspectives right here already in the chat. You had a lot of people under the comments say, dude, me and my wife travel the world. We invest our money in equities. We both are remote workers. We see zero need to be tied down in a home. We pay rent whenever we come back home after traveling, and that's what makes us happy. And then you have other people that say, well, I have a wife and 2 kids, and the peace and security I have of having a house, I do want to invest in the stock market, but that mortgage that I'm paying every month, knowing that I'm building equity inside of something that I will one day own over 30 years, that is something that keeps me, going in terms of feeling my financial future set. I think for people in their 20s and 30s, it's a very interesting question. And I don't know. I think one of the reasons the housing supply might be so strong is not just because of interest rates, but it also could be young people just don't want to buy a house. They don't see the need if they could rent and appreciate their capital in other places versus being tied down to an home. Kick Devices, I think houses are overpriced like crazy. I bought mine for 2 years ago. It's up over 100,000 in value. Yeah, dude, my parents that bought this house back in 2020, now obviously they got a good interest rate. It's doubled. Or if it's not doubled, it's up like 85% roundabout. So it's like that's not normal for the housing market. But granted, if they tried to sell this house right now, they might not be able to find a buyer. So I don't know if they would be able to actually sell it at the price that it's appreciated at. But the point is, like, is there reasonableness to why these houses have appreciated? Or is it just a function of inflation? Whereas the stock market, you can say, yes, it's a function of inflation, but also it's a function of earnings growth. And also this, you have to be very selective, right? Like if you buy Apple, I don't think Apple over the next 5 years, I mean, I don't know. I'm not as confident as Apple as I am in like NVIDIA over the next 5 years compared to a house. I think NVIDIA outperforms a house. I don't know if Apple does. So obviously it's a very subjective question, but it is a question that I think people are asking. And a lot more people are wondering what exactly is the value to being stuck in a home. Land is the only finite asset. That is also true. Now, a lot of people in the comments came at me with Bitcoin is the actual American dream. And I was like, dude, if I said Bitcoin, then I would 100,000% agree with all the people saying this is toppy. Like, I'm pushing back against this conversation saying it's toppy because I think it's a legitimate question. But if I said, no, the American dream is owning one Bitcoin, then I would say it's toppy. I'm not saying it's Bitcoin, although I do think a lot of people are thinking of Bitcoin. But, Bitcoin is volatile and there's not much earnings growth to judge it upon. NVIDIA, you can see what's happening. And I think that's what's also very exciting. Do you really own your home, though, if you pay property taxes? That's another good point as well. These are questions that people are asking. My son has played the stock market and crypto to create his down payment on a condo. So this was my response to most people that were commenting. My response was, I think the stock market could be a vessel for people in their 20s and 30s to begin that process of buying a home, right? Especially if you understand what you're doing in the stock market, or even if you don't understand what you're doing, if you're just like are confident in like the most important companies of our lifetime, Microsoft, the Mac 7, right? The NASDAQ, then that could be a vehicle to then in 5 years begin the process of creating that down payment. But a lot of people got a bit agitated and said, no, the house is the first priority. And I think that conversation is changing a lot. And it's changing in a way that is like very important, I think, for people to analyze, because I think young people just might be saying, dude, why do I want to be stuck in especially if you're single? Like, why do you want to be stuck in a property Like if I had to put a down payment on a house in New Jersey, let's say I don't even get like that big of a house at, the prices in New Jersey are stupid. But let's say like I somehow got a house at like 450, 500, had to put 100 down or even 75 down. That 75 would haunt me every day because I'd be like, dude, I know where I could put that money in the market. And as a result, it would just be annoying for it to be stuck in a house, hoping that in 30 years, like I have this amazing equity. Now, here's the other reason I talk about option selling so much. People say, oh, well, what if you can create rental income? Sure. But what if you have 500 shares of Tesla and you could rent out those shares every week at a 0.2 delta? What if you have 5,000 shares of Hood that you were able to buy at 20, 30 bucks, 150,000? What if that 150,000, instead of going as a down payment, you can sell 50 covered calls every week on Hoodie because the volatility is there, the premiums are there, the growth is there, and you can be conservative and sell them at 125, 130 and pick up an extra 2,000 bucks a month or 3,000 bucks a month. And if you want to be more aggressive, you could do 2,000 a week based on how aggressive you get because the premiums are like that. To me is where I'm like, well, that creates a whole new discussion. Because if you're sitting on 1,000 shares of Google, 200,000 bucks, and Google doesn't have really good premiums, but let's say Google's been flat all year outside of the past couple of weeks. Let's say you sell a 215 call on Google every week and collect another couple $100. Like that's your rental income. And that's rental income that you don't have to worry about someone calling late at night. You don't have to worry about someone saying that they need an extra day to pay their rent because they didn't get paid on time. Yada, like you get the money immediately with covered calls. So I think, and again, not everyone knows about covered calls. Not everyone knows about the real estate market. I'm very ignorant when it comes to all the loopholes that are involved from a tax perspective in real estate. But the point is there's ways to navigate the ability to generate equity and then income from that equity. A lot of people love real estate for the income. What if you could get income from your equity and collateralize it without having to necessarily deal with the upfront capex that is required to buy a home? I think it's a conversation that a lot more people are having. Yes, you do pay taxes. That raises your income bracket. I've never felt that taxes was the bear case on option selling. I mean, like taxes are inevitable. And if you have an LLC, if you own your own business, you can write stuff off against. Now, look, not everyone has their own business, but if you do have your own, because if you were creating a rental property and you were getting rental income, you would need an LLC, right? You would need a business to be able to do that from. So if you're going to be selling options, if you could do it via an LLC or just have some type of side business that maybe is not related to your options, but your option income eventually gets counted into all your taxes and you can write off things like a new computer against it. There's ways to take advantage of it. There's too many variables for me to say taxes is the number one reason to be scared of engaging in the equity markets. But again, I think there's a lot of different ways. I think there's a lot of different ways to engage in it. You said property taxes were bad. Yeah, but think about the level of return I'm getting on option selling versus property taxes. My house is appreciating maybe 5% a year. Again, maybe. With option selling, if I'm making 2% a month, that's 24% a year. Yes, I have to pay those taxes, but the level of income, the cash flow that I'm getting on the option selling, or just like if I buy NVIDIA at the bottom, right? Or if I get NVIDIA somewhere near that level, even if it's not exactly the bottom, maybe you get it at 140 versus 90. The appreciation on that asset is so much greater than the level of property taxes you would have to pay. And that's why it makes up for the taxes. If the asset is not going up, but you're paying massive property taxes on it, that's when it just feels like you're just throwing money away, especially if you're not even using the school district inside. Like, let's say you don't have any kids. You're paying property taxes to fund the school district, but you don't have kids. You're not going to school. Okay, I just got a phone call. Let me call this person back. I think you guys will be very happy with who's calling in. But that's my point, right? That's the difference of how I think about property taxes versus option selling. Steve, hello. I'm live on the Future Show.
You're still live?
I'm still live.
Jesus.
Dude, the chat is exploding already, bro. Already. Why do people love you so much, bro? It is incredible.
Because I'm hilarious.
That is true. You are hilarious. Steve, let me ask you a question. Would you rather own for the next 5 years? Let me phrase it like this. Would you rather put a $200,000 down payment on a house that costs, call it $850,000, or would you put that $200,000 into NVIDIA if you had to pick one over the next 5 years?
Not enough information to make a decision.
What do you mean? I just told you, $200,000 in NVIDIA or on a down payment on a house.
No, there's not enough information on the decision. Is the person who
I'm asking you. I'm
question.
not asking. I'm talking about you.
I mean, You can't ask me because I already own property.
Okay,
So-
but I'm still asking you. Give me your subjective opinion. What would you do?
But once again, you need more context. Does the person have rent? Do they live at home? Do they not have rent? You know, there's a lot of variables in that question.
I'm asking you a simple question. As someone who owns property,
There's nothing simple about that question. Nothing simple. You haven't given me any context.
the context is your life.
My life.
Yes, because it's a question for you. So now that you understand it's a personal question, what would you do?
So I would personally, because my situation is different than everybody else's, put the money in the market because I have no interest in more property.
Okay, that's fair. But
That's not.
Look, if I asked someone who didn't have a home and really was obsessed with getting their own property, their answer would be different. But the reason I care about your answer is because you could say another investment property. You could say, hey, I want to have another condo, but you're not. And I think that's important.
No, but that's the thing. I don't want, for me, I don't want to deal with tenants. Like, we've thought about it, but I really don't want to deal with tenants. I don't want to be a landlord. I don't want to deal with the headaches of any of that. So from an investment standpoint, I will always rather put money in the market than buy real estate because I have no interest in that. It's a headache. Like, you only see the good things that happen on YouTube or Instagram with it.
Oh, 100%.
You rarely see the horrible things that happen with tenants and having to carry the overhead of not having something rented out. It's just not something I'm interested in.
People are saying you probably would invest the 200 grand into a dairy farm instead of NVIDIA.
I mean, I gotta tell you, I went to the car wash today and I was thinking, how much money do car washes make?
Dude, so I told you when you and I were on the phone earlier today, I went to a car wash for my mom's car yesterday. I was thinking the same thing. I was like, what is the margin on a car wash? Especially a busy one.
Especially a busy one.
I'm going to ask ChatGPT right now. What is the typical margin on a busy car wash? I'm going to say it's like 15%.
Well, I got to tell you, a lot of them probably do really well because all the car washes I know have been in business 30, 40 years. You're not staying in business 30, 40 years by losing money.
Okay, so it's saying it nets 20 to 40%. Okay, industry average 13 to 21. Okay, so I said 15. Full service 40%. Subscription, I don't know who pays a subscription to a car wash, but that's 90% margins. But I don't think people do that. And then if it's express, it can be 45%. I mean, look, outside of the cost of labor and the actual maintenance of the facility, I mean, they should be making some decent dollars. Like, I paid 21 for my mom's car.
Yeah, you got to figure out, okay, how many vehicles can they do an hour?
Right.
At
Right.
$21 a pop. I mean, a car a minute, car every 2 minutes.
Yeah, and I think mine is open from like 9 to 5, literally. So that's 8 hours. You get.
I mean, it just becomes a math equation at that point with throughput.
Correct. Oh, self-storage is definitely a money printer.
Self-storage is such a money printer.
Dude, we should put that 200K into a self-storage facility. That is
such a money printer.
That's utilizing real estate in a really interesting way, in a cash printing way. Okay, so let me give you another scenario. Let's say you're young, you're ambitious, you have no property to your name, you have 200 grand. Why don't you give me your honest answer? Put that 200 grand on a down payment for a $800,000 property and start paying property tax, mortgage, all that stuff, or put that 200 grand into NVIDIA 180.
How old are you?
27.
No, not you. The person in this example.
I'd
How
say
old is that?
around my age. Let's say 25 to 30.
25 to 30.
25, 30 and,
home?
and single.
Do they live at home or do they have an apartment with rent?
They have an apartment with rent.
Okay, so they're already paying rent.
They're 25 to 30 years old. They're single. They're already paying rent. They have 200K cash. They're asking themselves, do I put it into NVIDIA at 180 or do I put it into a property with a 30-year fixed rate at like 6.5%?
So here's my first question. Why would you need to buy an $800,000 house?
Okay, let's say the house is, let's say 400.
No, but in all seriousness, I get it. You're using just a 25% down. I get it. But why not look to get a condo or a co-op somewhere for $300,000 or $400,000, put the down payment down, and then put the rest in the market and pay equity into your home instead of renting.
Okay, so
and
that
paying
that
off
is
somebody else's mortgage.
but you're trying to have your cake and eat it too. I'm saying
But you can have your cake and eat it too.
sure. I'm saying if someone wanted an
I
800,000,
have my cake and I eat my cake all the time.
I know, and you enjoy your cheesecakes in particular. But what I'm saying is this person really wants that $800,000 house because they think one day it'll be worth 1.6 million. They have enough to put the down payment. They have a good job. They're making their own income. They're going to be able to make the mortgage. They're not going to have any financial problems. But so my question is, should they rent and buy NVIDIA or buy the house?
Send me a link. I'll just come on.
Oh, we should have done this like 20 minutes ago. Okay. All right, I'm sending it. All right, what do you guys think in that scenario? Home or NVIDIA? Scenario is 25 to 30 years old. You can make your rent payment. You can you can make the mortgage as well. So it's whether the mortgage or the rent. Which one would you, and you're single. That's the other big thing. You're single. What would you do? All right, let me send this link to Steve. Wow, 60% of you said NVIDIA. Huh. And I don't think we can say this is biased because it's a stock market audience. There's a lot of you that are older here and have your own home or are in the process of paying off your own home. A lot of you have already paid off a home. So it's not like there's not homeowners here that wouldn't have an input. Palantir right here, 178, Hoodie 114. Overnight market's not really moving, guys. It's pretty flat. NVIDIA 180, Grab 516, Google. SoFi's up a little bit. But aside of that, nothing too crazy. This is not a chat full of degens. This is a chat full of people that are very unhinged. That's for sure. But I don't think we're degen. Like I asked you guys, it was like a 90-10 split on how many people bought Open Door the day it was running up. It was 10% of you that degened into it, but I think 90% of you were like, yeah, I'm not touching Open Door. Again, I don't know, but and again, for the people saying this community is super biased, I think this is a conversation I am seeing happen more and more on social media, not just with people in the stock market, with just people in general that are, let's call it late 20s into their late 30s. That generation of people are asking themselves, what is the value of a home? And you got a lot of articles coming out saying housing is a scam. You have so many different ways to think about the way people should live. A lot of people are living this digital nomad life where they're traveling more. They don't want to be tied down to a home. I just think we're seeing a new conversation around house ownership that we didn't see realistically over the past 5 years. Let me show you one more stat before Steve gets in here. I said I would show it. Credit. So another kind of bearish stat. U.S. credit companies are reducing their access to credit. New credit card account openings across 4 major U.S. lenders, Citibank, Wells Fargo, Bank of America, and Amex, dropped 5% year over year in Q2 2025. Openings at Wells Fargo and Bank of America declined by 34,000 and 117,000. American Express had a 6% drop of 200,000. And then Bank of America was relatively the same with Wells Fargo and Citi. So more banks have tightened and eased credit card approval standards this year. And over 87% of card rental mail offers were only sent to consumers who had already met specific credit criteria, the highest in 3 years. This is a reason I think Robinhood has not loaded the credit cards to so many people, because Robinhood's probably seeing what the other big guys are seeing and saying, hey, we got to be really careful with who we give credit to because this thing could get nasty quickly. So in one sense, this is bullish because less access to credit, it's not great for the economy, but it's good for like protecting the health of the consumer since they're not over leveraged. But it's also bearish because people have less access to capital. So that is another kind of bull or bear argument you can interpret in regards to what's happening in the economy. Steve, hello.
What's going on?
All right, so now you've had 5 minutes to think about it. Did you make a model in 5? Don't tell me you made an Excel model. I think you actually made an. You didn't. Did you?
I was laying on the couch.
Okay, thank goodness. If you whipped up an Excel model on a house versus NVIDIA, I would have a lot of respect for you, but that would be crazy.
Well, I would have if I was at a computer, but I was laying on the couch, so no, I didn't. But no, there's a lot of things to consider with that. And my advice would be live as cheaply as you possibly can for the longest amount of time. If that means that your parents will let you live at home until you're 30 and not pay rent, and you can just work a job and stack money, do that. Live as cheaply as possible.
Okay, but my question is, would you put 200,000 into NVIDIA or a down payment if you're 30 years old and you're single?
Look, there's a lot of things to consider with that, because if you are living at home, I think I would rather put the money in the market if you have no overhead. If you are already living in an apartment and your rent, for argument's sake, let's just say it's $2,500.
Yeah.
Say you live by yourself, it's $2,500. And then you have other expenses you're paying, utilities, water, internet, all that other stuff. I mean, it gets to 3,500 real quick.
That's true.
So now you have to think, okay, my outlay is this. Is it worth it for me? And it also is based on what you make. So is it worth it to put the down payment down and buy a house? And what is the monthly note for the house going to be? Because now you have taxes, you have upkeep on the house. There's a lot of other things that you have to really consider.
Okay, so let me say the house is slightly above what you would end up paying for rent. So let's say the mortgage and rent are relatively the same. What would you do?
Yeah, but mortgage and rent being the same doesn't necessarily equal out, because then you have taxes and you have the other things.
Okay, so let's say the house is
You
a
also
little
now
bit.
have to spend your time doing the lawn and other things that are consuming.
Okay, so let's say the house is $1,000 more. It's a 4,500 all in all. Your rent is 25 or 3,500. Like, my question is just knowing that you're single, you're not living with your parents because you're 30, you're trying to move out. You're paying rent. You can afford the rent and you can afford the mortgage. You have a good enough job where you can afford it. And let's say the mortgage is $1,000 more per month, all included with the taxes. Do you do the renting route and save a little bit on the rent versus mortgage, but have NVIDIA as the asset? Or do you say, I'm going to pursue the American dream and get a home?
So I disagree with having a house as the American dream. I think the American dream is living your life the way you want to live your life. And I think for some people, renting is going to work better because they just don't want the obligations. But I think that for other people, getting that ownership of property is a great idea, because it gives you a lot of flexibility down the road. Because look, 5 years, 10 years goes by very quickly. And over that time, you can build decent equity into something. So I think that there's multiple ways to skin a cat, and renting could be a great option for somebody if they say, you know what, I don't need a house. I'm happy with where I live. I'm going to put the extra money in the market, and this allows me to save and invest more. Whereas somebody else may want the equity stake in a piece of real estate. And I don't think there's a right answer, is what I'm getting at. I think it's situation specific based on certain parameters.
I agree.
There is no one answer.
Which is why the question is fun. Like, I agree with that. This is obviously super subjective. I'm just saying, based on,
you need to have everything laid out with all the expenses, what the income is, and then there's also the personality. I know people that still rent in their 40s because they just would rather be in a building. They'd rather be in a rental, have everything taken care of them, and that's what they consider their monthly nut for living. Whereas other people would rather be in an ownership position. I mean, there's no right or wrong answer.
No, I agree. There is absolutely not. That's why it's a fun discussion. It is also like, do you know how to sell covered calls? Could that replace rental income? There's so many ways to think about it.
So let's stay away from that. But, on one hand, some of the people that I know that are still renting, they can absolutely afford to buy, but their argument would be, is I've had this conversation with them, for X amount a month, I live in a building with amenities that I would never have buying a house. Yeah. And I am paying for those amenities. I don't have to have a gym membership. I walk downstairs. I have a huge gym. There's a pool. There's this, there's that. So on one hand, I completely get it. So I don't think that
what do you think about the argument that banks are willing to give you leverage on a home, right? They're willing to give you that extra 80% if you put 20% down, but the stock market's not just going to give you like money to go buy a home, right? Or to invest in the market. So how do you think of it from that perspective? Is that a net good reason to get the house instead?
No, I mean, look, it really depends on, now you're going down the rabbit hole of, okay, I'm going to buy a home, I'm going to build equity in it, and then I'm going to tap it and get a second mortgage and suck equity out and buy an investment property. And I'm going to keep repeating that process until I have enough income rolling in that it's on autopilot. I mean, people do that all the time.
People do that, yeah.
And what they'll do is, and I'm not saying that this is right or wrong or that it works all the time, but you buy a piece of property that's run down a little bit, you put the down payment down, you put a significant amount of money into it, redo it, you instantly raise the value of it, and then you get a tenant in there, start renting it, you can tap it and suck money out of it because now you have a higher valuation on the home.
Well,
So,
also for someone like Dello that put 14 grand down at 3.5% in 2020 when you had really low rates, that also complicates the conversation. Because then the equity investment looks pretty good.
And it's area specific. So if you were buying in Florida or Texas in 2020, I mean, and then a lot of people moved down there and drove prices up, or you could be in an area like New York where it may not really be going up as quickly because it's already expensive and people are trying to leave. I mean, I think it's regional specific.
Okay, now let me ask one last question on this, and then I want to talk about BM&R, because that example triggered my mindset on this. So
You're
in
gonna
20,
don't cover calls on it.
that is also true. In 2020, let's just assume, let's take the midpoint. Nvidia was $10. Okay, Nvidia was $10.
You could have never known that Nvidia was going to.
I'm just saying, bro. I like if you were able to rent instead of getting the property. Now, again, if you have wife and kids home, that's totally different. But if we're talking about dollar for dollar, the money in Nvidia, which requires like knowledge of Nvidia, of course. But if you're buying a house, it also requires knowledge of like the environment you're investing.
It's a bad example because you could have never known the market was going to do what it was going to do. Could have never known that. And you could have never known there was going to be a ChatGPT moment with Nvidia.
Well, some people did know.
Just things you could have never known.
Some people did know.
You're better off saying if you had just put the money in the S&P, because that's something that anybody could use as an argument. I'll just put the money in the market.
Where was the S&P in 2020? I think it was like
we're up 110% since then.
Yeah, you're right. It's a double. Yeah. It's a much more reasonable example at that point.
It's a much, because you can't say that you would have picked the best stock, but it's very easy to put money into an S&P index fund and own all of the best stocks.
That's
but
fair.
look, I had one of my friends saying that he was going to sell his house and dump his money in the market and just get a house to rent for a couple of years.
When did
because he thought the market was so low. Now, he didn't actually do that, but he was talking about it.
But he said that in 2020 he was going to do that?
Yeah, either 2020 or 2021 we were having that conversation.
The only reason I bring it up is because I think it is a real conversation. It's so nuanced and multifaceted, but there's a lot of people my age that are asking, is the house the right path? Over the next
I don't know that it is. I mean, for some people it is, but there's a lot of expenses. I think it depends where you live. I mean, there are houses in New York that people would think are just normal houses in other areas of the country, and your taxes are 22 grand a year. And they legitimately look like normal houses, like nothing out of a movie, not a mansion, not a McMansion, like a normal house. So
Bay Ray, a friend of the channel, he's a good example. This kid is 23. He's built up a very sizable portfolio thanks to Palantir. And for the next 7 years, he says he doesn't want to buy a house because he knows a lot about the markets now. It's been like 3-4 years he's been in it. I mean, in 7 years, I think this kid can do better in the markets than with a house.
Look,
now, granted,
live as cheaply as you can. Is when you live as cheaply as you can put away as much money as you can. I think the real conversation should be, don't do what so many people do and go out 4 or 5 nights a week.
Correct.
Don't go clubbing. Don't go to the bar. Don't spend all this money frivolously on stuff that isn't going to matter or I'm not going to go down
Until you can afford to. If you can afford to go out, then you should, because you have one life. You should enjoy it. But the people that like buy drinks at the bar on credit and are late on their payments, like that's.
I just think things are reversed because everybody goes out in their 20s because that's when they have the energy to go out and everything. And that's, I get it. But at the same time, if you can be as boring as possible in your 20s and save as much as possible, your 30s and 40s will be so much better.
I agree. I mean, dude, I'm a prime example of that. Like, I went out in college, but for the past 5 years, I've gone out here and there, but I have not had the life that my friends that went to a big corporate job have, that are going out every other day. Like I'm at home, I'm streaming, I'm working, I'm building, you know? And now that I'm moving out, I'm more ready to have some fun. But it took 5 years of sacrificing a meaningful social life.
And think about it, you would never be able to do what you're going to do if you didn't do what you did.
Not at all. If I was out partying every day for the past, or at least let's call it every other day, 2 times a week for the past 5 years, there would be no AK Media. There would be no Amit brand. There would be nothing, because the level of work that has had to be put in on this. Dude, we did Palantir Weekly for 2 years with the stock at 7 every Friday. I would travel back from Bergen County, where I was teaching public speaking debate. I would get to my computer 2 minutes before 11 p.m. and we would go live after a 7-hour workday of consulting. Like, it's that type of grind. I'm not going out on Friday night. I'm doing Palantir Weekly, you know?
Yeah, all the money that you would have spent that you wouldn't have been able to put into the market, and all the streams that you wouldn't have done because you were out. It is a different era now, and there's a lot of opportunity. And I just think that people should live like hermits if they can. It's not fun, but really taking it seriously and trying to stack as much as you can when you're younger, you will be able to do so much more in the future.
Yeah. And the other thing is I lived by myself in college, and I did nothing in college when it came to like grades. I really did have fun in college, like a lot of fun. So I kind of had the experience already. I didn't need, now I was trying to get my life together when I graduated college, and it was post COVID. No one, you know, so like I wanted the ability to grind for the next few years to figure things out. And I went through a lot of ups and downs, but I think that's necessary, especially at a young age. Okay, so BMNR, are we buying it? What's going on with this? Are you becoming a crypto bro?
You know the answer to this.
I already told everybody the answer. I just want you to say it now.
I'm a full-on crypto bro right now.
Dude, Steve calls me at like 3 p.m. today. He's like, you know that Tom Lee stock? I was like, yes, Steve. I know the Tom Lee stock. I know what you're talking about. He's like, I think we should buy it. I'm like, why? He was like, well, the guy says he wants to control 5% of Ethereum, and I think Ethereum's going higher, so I think we should buy it. I'm like, interesting.
It wasn't exactly like that, but I am now coming around to the idea of, if crypto is going to be real, and if Bitcoin is where it's at, and Bitcoin has no utility, and the Genius Act is going to pave the way for stable coins and payments, and a lot of these stable coins are going to be built on top of Ethereum layer 2. I will tell you right now that I think Ethereum is the play. And if this is going to be real, I don't see why Ethereum isn't going to go sky high from here.
Okay, so
What use case does Bitcoin have? None.
Look, that's your opinion. You can have that opinion.
What's the use case besides a store of value?
Well, that's the use case. That's a big use case.
A freaking rock has the same use case.
No, a rock does not
It's
go up.
called a diamond.
Okay, the point is, people buy Bitcoin because it's finite, and they believe it will be a hedge against money printing. That's a legit use case, in my opinion.
That's a theory.
It's a legitimate theory that turns into a
It's a theory, but outside of that theory, which I'll buy it. All right, sure, that theory has weight, but you're not using Bitcoin for anything else. Like Ethereum,
100%,
is going to be used for everything else. And if I've learned anything in the past decade, it's technology doesn't stop. Everything is going digital. And while I don't think collectibles will be tokenized, I am now starting to come around to what you and Tanner were saying about tokenized real estate and that type of stuff.
Okay, so then the question becomes, Ethereum,
Yeah.
and its use case for exciting you, which I agree. It seems stable coins and tokenization should be a massive use case. Now, the question is BMNR. So this was the first thing I asked Steve. What do you think about the $24 billion of dilution that could happen on the stock?
Not worried about it. And
Why?
I'm not worried about it because they're going to continue to buy Ethereum. These other treasuries are going to continue to buy Ethereum. The ETFs that are spot are going to continue to buy Ethereum. And then if everything is built on it and you start having the transactions and then a little bit burned off with gas fees and whatnot, you got to think that this is going to have the same impact as Bitcoin. And as more money keeps flowing into it, it's going to continue to go up. So the share price of Ethereum will get to the point where the dilution is not going to matter. And also, they already have 1.15 million coins. What are they going to do with it? It's a treasury. They're going to stake it. They're also going to get probably run one of the hugest nodes. They'll get the network effects. I got to tell you, I am really bullish on this.
Well, let me tell you,
Ethereum, and I'm bullish on BMNR.
Dude, it's 1.17 million. They bought 500 million last night of Ethereum.
Last night?
Yeah. They haven't announced it yet, but the Galaxy digital addresses show it.
Yeah.
So now
it was 1.15.
It's more now. Now it's still trading at a NAV of almost 2. So here's SBET is trading at 1-to-1, and they have 785,000.
Getting a little bit of a premium. It had
not a little bit. It's getting a 2x premium compared to
it's
SBET.
not. The Ethereum that I had on the books prior to the latest sale was worth 5.2 billion, and the market cap was just over 6.
No. BMNR's market cap, brother, it's 10.03 billion.
Hold on.
Unless Webull has it wrong. Am I wrong on this?
Hold on.
Let me check Robinhood, because that's why SBET is looking just way different.
BMNR is 6.3 billion market cap.
No, Robinhood and Webull are telling me it's a 10 billion market cap.
Seeking Alpha is saying 6.3 billion.
Guys, check on your brokerages. What's the market cap? BMNR. Yeah, it's 10 billion, bro. Where are you getting 6.
I'm telling you that I'm looking at Seeking Alpha. It's saying
Seeking Alpha needs to seek the right market cap, bro.
Well, they need to seek the right market cap.
Okay, so let's assume it's 10 billion, because everyone in the chat is saying 10 billion. BMNR trades at basically 2x. They have 5 billion on the balance sheet, 10 billion. They have a little bit more, 6 billion, so we'll call it 1.7x. SBET's at 1-to-1. Why would you buy BMNR over SBET when they're both doing the same thing? They're buying Ethereum and staking it. And I have an answer to this, but I'm curious about your answer.
So I think that BMNR is going to be able to raise a lot more money than SBET, and they're going to be able to control a lot more Ethereum. And it's going to be a mirror image of what MicroStrategy is doing.
Okay, but you're missing what I think is the biggest point. They have Tom Lee.
I wasn't going to say that.
But that's what you have. Dude, let's be honest, bro. One of them, no one knows who the hell's running it. The other one, this guy is on every media network every other day pumping Ethereum.
Yeah, I mean, look, I'm buying Ethereum directly also. So I'm doing it both ways. I just think that BMNR is going to correlate to the way MicroStrategy does or Strategy Inc. does over Bitcoin.
I mean, look, I don't hate it. I really don't. If we believe Ethereum's going higher, Bitmine's probably going to trade at a premium.
I mean, I think that's the biggest thing. If you think Ethereum's going higher, this is going to be a levered play against it.
And the reason you like Ethereum primarily is because you see a use case that Wall Street's embracing, correct?
Yeah, I mean, look, crypto's certainly not dead, and the Genius Act certainly makes it more advantageous for a peer-to-peer network and stable coins, and it has to be built on something, and it doesn't seem like it's going to be built on Cardano. Seems like it's going to be built on Layer 2 Ethereum.
I agree. Steven, thanks for the $10 super chat. Huge fan of the channel. I took Tesla profits and bought a bar in Korea. So I do party every weekend. I just get paid for it. What do you think about this situation? I think that's one of the coolest situations to be in. So he gets paid for owning his bar, and he gets to enjoy being at the bar, and he probably has to be there because he owns it. But he took some money out of the markets and bought a traditional business. And quite frankly,
you'll never hear me say it's a bad thing to take profits and buy a business that's a cash producing asset.
if Tesla, specifically is flat over the next couple of years, then it's a really good decision. Obviously, if Tesla goes to the moon, then maybe you might have some regrets. But it's a cash flow business. Not horrible.
So here's the question: are you buying BMNR and then just selling options weekly because of how big the premium is?
No, I told Steve I told you everyone in my chat like for the past couple of weeks, but I told Steve on the phone, my play is hood. I like owning the shovels to the gold.
You do two things at once.
Yeah, but dude, if I buy BMNR, I want to have a real position. I don't want to just have 100 shares. And with hood, I'd rather add to my position because I already have so much of it and still sell the calls because the call premiums on hood, they're not as good as BMNR. I did correct myself last week. They're not as good, but they're still pretty damn good. And I'd rather just own the business. It's nothing against BMNR. It's just like if Ethereum goes up, I know hood's going to do well with it. And I understand what I'm buying with hood. Having said that, I'm not opposed to buying BMNR. I just feel like it's not going to be a relatively meaningful position. And so I don't know. Also, I'm a little worried.
You're looking at it as percentage of your portfolio.
Correct.
You're not looking at it as how much alpha there may be in the upside.
Well, look, the upside on Ethereum, I think, is massive. And therefore, the upside on BMNR should be massive. But that means the upside on Robinhood should be pretty damn good, too. And the risk reward.
Yeah, okay. Riddle me this. Robinhood at 118, do you think it goes to 236 before BMNR gets to 110?
No, I think BMNR gets to 110 first, which is a good point. However,
there you go.
When it gets, but hold on. When it gets to 60, when it gets to 70, when it gets to 80, BitMine is going to press a button that unleashes a lot of that 20 billion onto the float. And I think
100%, and it's going to dilute. I'm not saying it's not going to.
So my point is you're talking about the double quicker, but the downside of trying to get that double quicker is there's dilution. And MSTR is Bitcoin at all-time highs and MSTR is down 10% for the week. Like that is your perfect case study on the stock not following the asset.
Right. But with MSTR, you look at it over 5 years, it's up 2,400%.
And that's the bull case. And that is one
being
thing.
Down 10% in a week doesn't matter. That's the whole point with BMNR. This is the infancy of this with Ethereum.
That I 100% agree. That I
and look, lightning may not strike in the same place twice, but if it does, getting in now, this is very highly speculative. Okay, I am not putting a lot of money in this. This is, if it doesn't work, I'm not going to be mad, but I'm putting enough in where I'll feel it if it works out.
Well, okay, so that's also an important point. Like, because I want to put enough in where I feel it as well. That sounded very interesting, but
the way you said it sounded much different than the way I said it.
Yeah, I said it in a much different way than you said
it. In a much different way.
I want to feel something if I allocate to this position. But look, if we get down to like the high 40s, I think I'll just buy it and I won't care. But I just feel like that dilution's coming. Now, granted, the dilution might not matter because there's enough people to just say, I'm going to buy the.
Yeah, the dilution may not matter, but even if it does matter, you're going to be writing calls on it and just buying more.
But I'm already doing calls on hood. That's what I'm saying. I just don't want something to manage.
Oh, so you're telling me you've never wrote calls on two things at once?
Yeah, but dude, I'm just like, one is super volatile. One I have a big position in that I'm managing every week already. Do I really want the headache of managing?
Can I let you in on a little secret?
Dude, Steve, just because you buy 800 stocks.
No. Can I let you in on a little secret?
Go ahead.
You sit behind a computer all day.
Okay. That's unfair. Okay.
You have the time to look at a screen and do this.
That is very
it is not unfair. You sit in front of a computer watching the stock market all day long.
I get it. I'm just
all
saying.
All day long.
There's a little bit of mental.
You watch the stock market all day long.
I can't even argue against it because you're right. So I'm just saying there's some mental peace in knowing you have this position.
You have a mental block. I get it, but don't tell me you don't have the time to manage it. All day long.
I should have said the energy to like navigate and manage a portfolio with two incredibly volatile assets, dealing with covered calls on them. When you look, here's the real look. You're right about the energy time argument. My point is, if I think the same upside exists on a volatility level for hood, and I understand that business better, and I already have a big position, then why do I need to diversify, which to me is not diversifying. They're both leveraged against crypto. One has the actual asset, the other one just is like a really good business behind the underpinnings of how people trade crypto.
Can I tell you why?
So I pick one over the other. Go ahead.
So you're going to hate this.
Okay.
You're going to hate this. Let's just say you were going to buy 100 more shares of HUD.
Okay.
That's
$10,000.
basically what? 11 grand?
Yeah.
At this point? Okay. So 100 shares is not going to really do much for your position. You're just going to average up a little bit. It's not really going to make a dent. But instead of buying another 100 shares so you can write one more call option, you could get 200 shares at BMNR and larger premiums that you could take every week and roll back into Robinhood with somebody else's money.
Yeah, but the risk is BMNR tanks when they dilute, whereas Robinhood.
But you're bullish on Ethereum.
Yeah, but no. There's an issue here. If I buy 57 and the damn thing goes to 40, I can't write covered calls at 45, whereas all the juice is going to be, because then I'm down $12 a share.
Not buying that.
What do you say?
Not buying that argument.
No, you have to. No, you cannot. I understand why you wouldn't buy that argument, but this is volatile, dude. This thing was at 70 and it went to 57 in the same day. You can't tell me this thing can't go back to 45.
Yeah, of course it can. Sure.
So then the argument
you go to 90.
No, but then you would have to. Okay, relax. It's not going to. Ethereum really has.
Robinhood can't go to 90. It's not like I said 40.
Oh no, I thought you said BMNR is going to go to 90.
No, I said Robinhood could also go to 90.
Yeah, but Robinhood going to 90 would be a macro play, not because they diluted shareholders. Like BMNR, you're stepping into the dilution, and you have to be okay with it. And second of all, the answer you would give me then if it goes to 45 is buy the dip, and then that's more than the 11,000 we initially discussed. Right, so your argument starts to fall apart.
I'm just saying the premiums are so big.
Look, the premiums are good, but it's not like HUD premiums are bad. But they're definitely good.
I didn't say they were bad.
And remember, really good premiums. Like I was looking at MicroStrategy, the 450 call for this week, they're paying you $1.50. Really good premiums come with volatility. So I will take less premiums on HUD for a little bit more of a stable stock than BMNR, which could dilute by $1 billion tomorrow.
Oh, not could. BMR is going to dilute the hell out of people. I am just looking at this like with all the institutional buying that's happening and will probably expand into Ethereum, I feel like it's going to drive the price up.
I agree. But again, here's the differentiator. Let's say ETH is flat, but BMNR dilutes, BMNR dumps.
Absolutely.
HUD will not dump unless Ethereum dumps.
No, I mean, listen, HUD will continue to make the money off of me buying Ethereum.
Or you selling Ethereum.
Correct. Well, I'm not selling Ethereum, so.
Right, but if you buy, someone's selling it to you if they're selling it on HUD, and HUD, you can't stake because you're in New York. I can't stake because I'm in Jersey.
Yeah,
but
I'm very annoyed at that. Like, let me make my own decisions. Like, seriously.
Can we ask ChatGPT why staking is not allowed in New York?
Yeah, ask them. It's got to be with some ruling with the Southern District.
But the point is, HUD makes fees off staking now, which is also.
Yeah, they take
very good. 25%.
Yeah.
New York State requires any business engaging in virtual currency business activity to obtain a BIT license from the New York Department of Financial Services.
Dude, call Vlad and tell him to freaking get this license. What are we doing?
Dude, it's not about Vlad. If none of the exchanges are allowing it, it has to be something else. This BIT, if it was a license, dude, I think they would have done it by now. It seems like. As a result, many centralized platforms like Coinbase actively block staking for New York residents. Users in NYC frequently report. The SEC has challenged staking offerings as unregistered. That's the main reason right there. Vlad doesn't want the SEC down his throat talking about how this is.
What is wrong with users in New York? So users in New York frequently report that staking options are available to them. Okay. Yeah. Okay. Let me retrace that. I thought they were complaining about something with staking. Yeah. It's not just let it happen.
Dude, look at this. Kraken has settled with the SEC and exited the staking market entirely because of how much shit they had to deal with.
What is going on? Just let us do what we want to do with our money. Like, come on.
I agree.
What's the downside to letting us stake ETH?
I don't get
it. It doesn't make sense.
Okay, so how much BMNR are you buying?
I have no idea.
See, one thing about Steve, one thing, he's already smiling because he will come up with a thesis. He'll get bullish. He'll debate it. He'll defend it as if he has 500 grand in it. And then when it's time to be like, so, all right,
By
you made your-
one share, just for
made
you.
one freaking share. And then it'd be like,
Yeah,
told
just
you it was
for
going up. Told you.
Just so I can say it went up.
This is my point. As much as you love it, I don't think you're going to be buying a bit because you know that dilution could be dropped any second.
I told you I'm not putting a tremendous amount of money into it.
What, 100 shares?
It's gonna be a little more than that.
Okay, 200 shares?
Let's stop the conversation there.
Okay, so 10 grand. You're willing to put 10 grand. That's
Let's stop the conversation. Like, it's gonna be enough where I'll feel it if it goes up, and if it goes down, I'm not gonna care.
who the heck says 6? Steve is not even. I would have to have a conversation with Steve at Ben and Jack's if this man YOLO'd 100 grand. He's a midlife crisis. But there's no way in hell Steve is putting 100 grand into BMNR. He knows I'm right. There's no way he's doing that, bro. Look, I don't think it's a bad decision if you do put 100 grand. I just think it's super volatile.
Look, I'm looking at this from 5 to 10 years out, and I really think Ethereum is going to go up. Like, keep in mind, it feels like Trump's been in office for 10 years already. It's 6 months.
That's facts, bro. That's facts.
We have another 3.5 years of this, and with Sachs as the cryptos are, and with the Genius Act coming in, I really feel like crypto is going to do well over the next 3.5 years.
It's
I
stupid.
think that Ethereum is going to close the gap with Bitcoin.
It's hard to fade it. It's really hard to fade everything. They're telling you what they're gonna do.
Yeah.
And we know that Robinhood with tokenization on Ethereum, stablecoins on Ethereum. I mean, JD Vance didn't say we're buying more Bitcoin, but he did say the Bitcoin that we have seized will be in the strategic reserve. So that's about 20 billion of Bitcoin. They're not selling it.
And think about this. I have no idea who the presidential candidates are going to be from either side. But if JD Vance is the presidential candidate, and if JD Vance wins, you can expect a continuation of this type of regulation with crypto. And even if he doesn't win and the other side wins, I don't know that they're going to want to redo everything, and they may run on a platform of being pro crypto. So it may not even matter who gets elected next time. We'll know more when the primaries start coming out and the questions start getting asked. But I got to think at this point, no matter what side you're on, in order to win, you're going to have to take a pro crypto stance.
Oh, 100, dude, the Democrats, I don't care if it's AOC or Newsom, there's no way they can be anti-crypto.
You're going to have to take a pro crypto stance.
ETH, by the way, 500 billion, Bitcoin 2.3 trillion. So you think it 4x's from here to close the gap?
I think it can close the gap. I don't know if it can overtake Bitcoin. I would like to think that it can because it's got so much more utility. And if this really gets wide scale adoption with tokenization and with stable coins, Bitcoin doesn't have any of those catalysts. So I think that there's going to be a lot of money pouring into it. And I think it can certainly do something.
By the way, as we're speaking, folks, yeah, Japan's market just hit an all-time high.
Look at that.
I mean, it's like, again, different. Like, this is not just U.S. tech stocks. Across the world, you are seeing market participation.
And let's remember, everybody thought Tom Lee was wrong about everything he's been saying. He's been right on every single thing he's predicted, except for new predictions. What hasn't happened?
There's one thing he's been wrong on.
What?
Small caps. He called for Russell to 300. So that didn't happen. But outside of that, he's been
right. But, and I'll give him a pass on that because he truly thought when he was making those statements, Fed was cutting before they did. Right.
Yeah.
He thought it was happening. Originally, he thought it was happening in March, and it kept going, getting pushed out. He made that under the pretense of, yes, he's wrong, but the underlying thesis was rate cuts were going to happen in March.
Also, as a macroeconomist, to get one thing wrong in 5 years, put his track record up against anybody. Like no one
Oh,
else.
his track record's great.
No
And
one else.
he's been pro crypto when nobody else was. And if he thinks Ethereum is going to 60,000 over the next couple of years, I mean, at this point, with his track
Not
record,
couple of years. He said over. He didn't say over the next 4 years.
it's 20. He said by 2030, didn't he?
Let me see if he said that, then he's more bullish than what I thought.
I mean, okay, next, because a couple is 2. So next several years. We're already halfway through 2025.
He did say 60. I don't think he has a time frame on it.
I thought he said 2030, but I could be mistaken.
Oh wait, hold on. I got the clip. Let me see if he has the actual prediction right here. Let's see.
Ethereum is the place where Wall Street and AI are actually going to be building a lot of products. So our view of $60,000 ETH is really just a simple sliver of that, just saying that if Wall Street builds a lot of banking activities and just 20% of that share is on Ethereum, and then Ethereum captures a similar share of payment rails, that's going to actually value the Ethereum network at around $60,000 per ETH. So I think
Yeah, it would be next several years theoretically.
So I mean, I'm saying 4.5 years. That was my interpretation. I don't know where I came up with 2030, but is that crazy to think? I don't know.
Do you I was gonna say, do you think like we kind of need this regime to continue in 2028 for crypto to be as like? Do you think the Republicans need to keep winning, or do you think the Democrats even?
No, I mean, I think that it will happen no matter who, because I think it's a losing proposition for the left to go against it. We're going to have to see what happens in the primaries, but I think anybody who wants to seriously make a run for president is going to have to embrace crypto at this point.
Yeah,
I really do.
Okay, here's a fun question because I have my answer. You buying a house or you buying BMNR?
I mean,
I'm buying a house, baby. I'm not living with that volatility. No way, Jose. I'm buying a house. I'll say buy Nvidia over a house, but I'm not. And I believe in BMNR, but dude, I'm not living with that volatility every day. No way. Look at this. Speaking of the house topic, again, this is what adds fuel to the fire on this conversation. In 1950, if you put 8,000 into the S&P, you would have 16 million. If you put 8,000 into this home, this person just said, they would have had 1 million in California. I mean, it's just like, again, and from 1950 to 2025, we've had some pretty
apples
bad
and oranges.
I get it, apple and oranges, but my point is more of people in my demographic and age range are thinking, especially as they become more.
Listen, you know how I feel. Live at home as long as you can, save as much money as you can.
Okay, no, I do love options strategically. I was levered up a lot last year. This year, only thing I have real options on is Grab and SoFi. But if I had 200 grand saved up and I had to pick between BMNR or a house, you could make the case for BMNR. You really could. But it's like that type of volatility. What if ETH just doesn't end up?
Why can't we just say the S&P or a house?
Oh, no, because the question is more fun if it's BMNR or a house. You know,
That's really it's really risky.
It's very risky.
Really risky.
As much as I think the thesis could play out, I'm buying a house. I can't live in Nvidia. Okay, so again, the point against this argument was if you can afford to rent, even if you can't live in a stock, obviously, if the stock appreciates materially against the home, that is where the argument mathematically is what people start thinking about. But I think the best balance, as you said, is like, can you eventually, like, I want to be a homeowner. I'm going to be 28 in 2 months. I'm thinking in about 2 years, hopefully some of my private investments do well. I can liquidate some of those because I don't want to sell Hood, Nvidia, or Palantir over the next couple of years. And then I'll put a down payment. But just like right now, I don't think is the smartest thing to do. Maybe I'm wrong. Maybe in 2 years, market crashes and it would have been great to sell.
I mean, listen, you know, you and I had the conversation. We don't have to go down that road. You know how I feel about your situation.
Yeah.
That's not a public conversation.
Yeah. It's just, it's a different perspective that I have on how to think of it. But also, I'm in a different position in life as well. So it's just how do I leverage this one? Like
I'll make a general statement. If you are in a position where you have to take on the expense,
No.
and you have the ability to put a down payment on, and you're still going to be able to save money, I would rather own because at least I am building equity into the place.
Agreed.
That's just my own personal opinion. Because otherwise, I am paying somebody else's mortgage.
Agreed. Now I'm also very lucky.
I was making a general statement. Let's not.
No, I know. I get it. But just to let I'm also I got into Figure, right? Like I'm very, very freaking lucky about that. So to me, I'm willing to take the risk reward. That investment is already 20x. I'm willing to take the risk reward that in the next couple of years that investment will continue. That is what I would sell to buy the house, not or put a down payment on a house, not Robinhood at 115 when I think Robinhood's going to do way better than 115 in 3 years. You know, so or borrow against Figure versus sell Figure. Dude, Figure, low-key, I don't want to ever sell Figure because have you seen this shit that Brett's been posting, bro? He is owning the haters that are freaking commenting on him. They're like, oh, well, I can't do this. And then he posts another video and he's like, are you sure about that? So this guy was like, oh, does it still work if you raise the table 6 inches? And then he posts a new video raising the table up to show the dexterity of the robot folding. Like, this is wild, bro. This is why I think, all right, put in the chat. What do you guys think? Let's do a poll. Will Steve let his Tesla covered calls get called away? Will Steve, after seeing this video, will Steve let his Tesla covered calls go away?
I'm going to look right now and I'll tell you. Hold on.
I don't think you are, because this is what Tesla's going to do. They're probably going to be better than Figure because they have more manufacturing capabilities. They're going to scale faster. And this shit's taking Tesla to 1,000. Not overnight, but this is the future. Like, if you have a heavy Tesla position right now that you bought in 2019, do you sell that just to be a homeowner? I mean, like, no, dude. Like, if I got a 2019 Tesla average and I'm loaded up a couple thousand shares, I'm not selling a single share, even with Elon being crazy to buy a house just for the hell of buying a house. Because that Tesla, especially if you got in that early, if you can afford to rent, and if you sell covered calls against like 30% of the position to make your rent,
I would have to roll this out so freaking far that it wouldn't even make sense.
What, to 2027?
I mean, I could at this point, but
no, but it does make sense to roll it out because Elon basically told us Tesla's dead money in 2026.
All right, so this is what I'll say. My calls are September 19th at 260, and I could roll to December 17th, 2027.
For what price?
And go all the way up to 500 and still get paid.
Bro, you still get paid?
Still get paid.
Is it any meaningful credit, or it's like a couple bucks?
No, I mean, I could still get a $3 spread per hour.
Dude, there is no way you are letting. Let me just explain that to everybody. Steve is underwater by like $80 on a call right now. He can roll it 2 years, get that call to go from 260 to 500, get paid for doing that, and all he has to do is hope Tesla's not above 500 by December 2027. And even if it is, he gets to sell his stock at 500.
It's such a long time.
Yeah, but I mean, is there a better thing to do with that money?
Yeah, just let it get called away.
Yeah, but then you have to put
Put
that
that
money
money somewhere else.
I mean, you could put it into BMNR, but which might actually.
Is this when we have to do a Palantir at this point?
Yes, and the 2028 options are coming out in September, so you can technically get some better premiums rolling it. But you're way more underwater on Palantir than Tesla.
So much more.
Someone says, my exact scenario, Mitt, I have 9,000 Tesla shares and renting. See, dude, I don't care what anyone says. You have 9,000 shares of Tesla. I don't know when you got in. You can let me know your average in the chat. But like, if you got in at under 100, selling that to get a house to feel like you're like owning equity in that, when we know this where Tesla's going. Obviously there's a risk to Tesla, but like if you believe and you have such a margin of safety, rent and then keep your stock and sell covered calls against it, far out the money if you have a really good average and generate some income. Like, I just think that is, if you don't need the validation of owning a property, not the craziest idea. And I think a lot of people.
2028 chains come out?
September.
These Palantir cover calls are so painful right now. Oh my God, I shouldn't have even looked.
For those asking how I was able to invest in Figure, I got very lucky with a mentor who came into my life, who actually should be at the Miami meetup, Derek, for those that know him on the channel. And yeah, he got me into that in February last year. But very good friend of mine now. I think he will be at the meetup, and so you guys will be able to meet him if you're coming through. But I got really lucky, right? So in that situation, I'm like, okay, when you basically get that lucky, that could be what you liquidate or borrow against to put a down payment versus having to sell your actual equities right now. Also, I just don't want to sell Hood and Palantir, bro. Like, I don't want to walk into a house every day knowing that Vlad and Karp had to give them up to get this house. Like, I don't know. I don't like that.
I gotta go get my phone. Hold on.
Okay. I don't want to sell Nvidia either. I don't want to let Jensen down yet, dude. I'm being facetious here, even though I can't say that word. But the point is, I think those companies are going to grow, and as a result, you know, I wouldn't sell them right here. You still have to enjoy life. A lot of people are making that argument as well. I think you can enjoy life while you're renting too. Now, again, if I have a wife and a kids, it's a different story. But if I'm single, I think like people are like, oh, well, you're not enjoying life. You're only thinking about investing. I'm like, you can enjoy life while you rent. That like, I don't understand that argument.
Laying on my couch.
What do you say?
I enjoy life laying on my couch.
There you go.
Granted, I lived a very interesting life during my 20s.
Wow, this guy's a $44 average for 9,000 shares. So hold on. 9,000 times 44. He put an initial investment of, call it 400 grand, 396. Those 9,000 shares today are worth what, 350? That's worth 3.1 million. Okay. It's not bad. So 350 divided by 44. He's up 8x on the investment. And if those 9,000 shares, you know, if Tesla gets to 500-600 over the next coming years, even over the next 5-7 years, the opportunity cost of selling some of that to buy the house, unless you have the wife and kids, all those, but like if you're just, you don't need the house, or you can pay a rent with the wife and kids and not have to worry about selling Tesla, given you got in that. I don't think Tesla's going back to 44 again. So that really is a generational opportunity. I think it makes more sense to hold the stock. Dude, Steve, we need to do a podcast one day about your 20s.
No.
I knew he would say that, dude. We need to let everyone know who the real Steve was when he was 20. This man was different, bro. You guys see him as this like Seeking Alpha article. This guy was different.
I'll tell you who was different. Kazmat last night.
Oh my gosh.
Like,
dude.
if anybody watched that fight, his eyes right before the bell went off, it looked like he was possessed, and he just started raising his eyebrow at his opponent. It was awesome.
I didn't even know there was a fight going on last night.
Oh my God, it was so awesome. Everybody was saying to me that it was crazy that Duplessis was going to win. No, absolutely not. He was not going to stop the takedown at all. At all.
So how long are these fights? Like a couple hours?
This fight went 25 minutes, won all 5 rounds.
Wait, it's 20. That's it? 25 minutes?
He landed over 500, or he threw over 500 strikes. Like, he controlled Duplessis for so long on the ground. It was just, and people were getting mad for some reason. Like, this is UFC. Like, you know,
Wait, so it's not like an NBA game? It's a 4 hours? It's like 25 minutes?
It could be 8 seconds, could be 15 minutes. If it's
that's true, because
could
someone could get knocked out. That's true.
Yeah.
You're right. That's fair. Look, I'm not saying I could fight for 20. I'm just saying I'd like. That's true.
Dude, can you please get into UFC?
It's
so incredible.
Dude, it's boring to me. Like,
how is this boring? It's the most.
What did I do Saturday night? I watched. Oh, I put on a movie. Oh, you're gonna get mad at me.
You just start a sentence where you put on a movie.
I put on a movie, but you're not gonna like the movie. I didn't watch it. I fell asleep to it, but you're not gonna.
I actually rewatched the last 5 episodes of Billions this weekend.
Billions is one of the worst stock market shows.
You are out of your mind. It's one of the best shows ever.
Billions is not a good show.
You watched 1 episode.
No, I watched 1 season and I didn't like it.
1 season, and the first season was great. You're crazy.
Okay, well, I watched on Netflix 17 again with Zac Efron.
What is 17 again? Like,
No.
what is this?
Can anyone defend me here? That is not a horrible movie. Okay. By the way, 60% of people said you wouldn't let your shares get called away. It is about a guy who's 45 and then he gets struck by lightning and then he turns 17 again. And he lives out his life in a different way. Now, I got through like 10 minutes of it, then I fell asleep. But the point is, this is what I choose.
Can you find a video of Khabib wrestling a bear, please?
No, I can't. Wait.
On Instagram. It'll be on Instagram or YouTube Short.
As long as it's not UFC, then it's okay.
No. It won't be through UFC. I wouldn't want Uncle Dana to freaking send you to federal.
Uncle Dana just picked up $7 billion, bro.
7.7.
7.7 billion. Dude, he really fought a bear?
Just play it. It's so incredible. So this isn't even. This is not the one I was thinking of.
There's another one.
Him.
This one?
Wrestling the bear in the cage.
Okay, hold on.
This is a baby.
This one?
Oh yeah. So down. No. You go play that. Up right there with the
This
red
one?
arrow. Yeah. That.
Hold on, let me turn the music on. Okay. That's Khabib? Wait, that's him?
Yes. It's Khabib.
Holy crap, dude. Dude, this guy. I mean, like, I don't think that's Tom Lee every morning actually with the Bears, but still, that's wild, bro. I would never even think of that.
This is not CGI or anything. Like, this is real.
Wait, so is this guy like undefeated in UFC?
Khabib's retired. He is undefeated.
Oh, Kazat is a different guy. Is he undefeated? This Kazat guy? Is the Kazat guy undefeated?
No, he lost one, I believe.
So who's the most undefeated UFC guy in history?
Johnny Jones.
Is he? Like,
I don't consider. I mean, they reversed his loss against Hamill with a 12-9 elbow, which is ridiculous. But
all right. That is Tom Lee with the Bears, right? That's I gotta post that. That's legit freaking.
But the only problem with John Jones is that he did fail 2 drug tests. So some people, even though it's hard to make an argument about who the greatest is, I look at it like this. You put 2 people in a room, who's walking out, regardless of the circumstances. I gotta pick John Jones over anybody.
I'll pick John Jones because you like John Jones. So there you go.
John Jones is freaking.
All right, let's end the show on this. How was the card show? How was the experience?
It was good.
Did you enjoy the vibes of the show?
Yeah, listen, it was good. It was good. And by the way, I don't watch UFC as much as I did. I used to watch it religiously from 2000 to probably 2016. I'm a big Fedor person, so it's hard for me to say Jones over Fedor. Just for your chat.
Do you care more about UFC or cards? If you had to like a hobby, which one do you care more about?
I would have said UFC for a long time. Now it's more cards. But Pride was freaking amazing. The old days of MMA were so crazy. I'll never forget when my buddy introduced me to Fedor. Holy cow.
We do have some crypto volatility, guys. It looks like a whale is done. I mean, these candles look like, I can't confirm it, but it looks like a whale is dumping. So both Ethereum and Bitcoin down 2%.
Good. I'll buy more tomorrow.
Dude, he is such a crypto pro. He's ready to buy the dip. Yeah, you could be getting some whale price, or it could be Sunday night algos, which tends to happen every time on a Sunday. But Steve, I think Steve did buy a couple of assets at the.
Yeah, I bought a few things. And we actually just bought something today. My buddy and I split it. We actually got a Brady Chrome today.
Oh, this is what you were talking about this on Friday, right?
Yeah, we ended up getting the Brady 2000 Chrome today in a bundle deal, but the show was good. The problem is nobody really wanted to move off of their prices. And what I had said is, like, I need to be in at certain prices for me to buy these things, because I look at it as opportunity cost. Like, while I want to own certain cards, I don't want to own them at the wrong prices, because I can just put that money in the market. And I was able to pick up some things that I wanted. I wasn't able to pick up everything I wanted. And some things I wasn't willing to spend an extra 300, 400 bucks on, because it would have put me out of the money. I didn't think it would be worth it. And, you know,
The funniest thing Steve told me is at these card conventions, let's say you want to buy at 50, someone wants to sell at 80. They will do like a game and leave it to chance.
yeah. So a lot of it is, if you are at like 1,000 and they want 1,100, you'll flip 900 or 1,200.
Yeah,
That type of stuff. So
it's a coin toss.
my buddy played a hand of poker for the difference, and we just started playing poker in the middle of the card show.
It's hilarious, dude. That's cool because it just means everyone there is like, the vibe is like, you know.
I mean,
like,
there were thousands of people there. It was at least 3,000 or 4,000 people there. Easy.
and there's no stock that has exposure to all this industry.
No. Fanatics if they go public,
Yeah, but
because they own tops.
Yeah, but Ruben's not going to go public for a minute, I feel like.
But it's interesting because these days everybody's on their phones and everybody is going off a comp, and the dealers, I feel, are not willing to deal as much anymore, because when you leave, there's still 100 more people that are going to walk to their booth at one of these shows. I think actually I'm starting to really think that you have more of a chance of negotiating a deal at a local card shop than one of these shows, because they have to make their rent. They got all these overhead expenses. So if you walk in with cash, you're actually going to be able to get a deal. A lot of these guys wouldn't come down. They were willing to maybe come down to 95% or 96% of last comp. I remember when people would sell at 80, 85% of comps if you had cash. So
Yeah, and I think the dynamics now are giving people more incentives to make sure they're on the right side of the trade.
well, it's funny because our buddy had gone on Friday and he picked up passes for us that we didn't have to wait online on Saturday. And he was like, "You guys got to go meet these two kids." I'm like, "What are you talking about? I'm not meeting any kids." He's like, "Trust me." There was this 11 and 14-year-old that had a booth with their uncle. The 14-year-old bought $30,000 worth of cards on Friday. And him and his younger brother were sitting there flipping. And you listen to these kids talk, I'm telling you, they're going to be straight freaking killers in business when they grow up. Like, it was crazy listening to them and seeing them interact with people and making deals. My buddy bought 2 pretty big cards off of them.
Dude, like, whether it's 30 grand on baseball cards or Pokemon cards or stocks, like, these kids are just.
And their dad was just walking around the show, just wasn't with them. It was crazy.
They were negotiating themselves.
Yeah.
But this goes back to my point, Steve. I think when kids get this much of a interest in business,
It's
this early
great.
at an age,
It's great.
they start thinking, hey, do I put 200,000 on a down payment or do I go invest it? You know, like, these are conversations I think people are starting to have. But it's also inspiring because, I mean, you need the youth to be on top of their shit when it comes to investing in the future, right? And the more of them that are into it earlier, because already, and the reason I say youth is because we know millennials have just been unbelievably horrible with their money, whether it's credit card bills.
I think that there needs to be a whole big education. I know everybody, it's easier to say it than do it, but I really do think that everybody needs to take a step back and just realize that what is shown on TV or social media is not real.
Not at all.
And, the best thing that you could do for your older self is live well beyond your means and invest the rest of the money while you're younger.
Well,
The
also
time compounding of money is so powerful.
the All In podcast, they had a take on student loans, and David Friedberg's like, dude, it's time to get rid of the student loan nonsense. If you're going to major in art history, you're not getting $200,000 from the government.
100%.
It's just that
100%. It's insane. You need huge education reform. Huge.
Yeah.
Like, we need to be realistic about this. UCLA, Harvard, Syracuse, those are just the three that came to my mind with prices that are out of control. When I found out how much Syracuse is, it is freaking crazy. And my argument is, how long is it going to take somebody that's not on scholarship or their parents aren't paying for it? How long is it going to take them to pay back that loan? It doesn't make sense.
The only reason my loans are down is because I paid a good chunk off of it in 2020 because I worked my ass off, and I gave that 15 grand in February of 2020 before they paused it for 4 years. I could have put that 15 grand in the markets, and 2020 was a great time to buy. And I'm paying off my final 45 grand next month. I have 45 grand. It's not 45 grand.
Somebody who's
4,500.
You freaking can't operate a camera.
It's not my camera, bro. It is my camera. It's this whole studio, dude. I'm like, when I move out, I think it's going to be a lot better. But the Wi-Fi, dude, on freaking Wednesday was freezing. It was horrible. But
I never sent you the link.
But I'm paying off my final, call it $5 grand of student loans, and it's just like being tied down to those student loans when you're 22 and you're not having a job that can pay that back. That shit, it is damn near criminal.
Yeah, I get annoyed at the whole student loan thing because, one, these colleges are so freaking expensive. It's insane. How can you expect anybody to pay 60 or 80 grand a year for college? It's insane.
They're a kid. They don't have any.
And then coming out with a degree in something you're not going to get a job in that area, it just doesn't make sense.
And also, most 22-year-olds don't have a lot of value to society. Like, even if they have an amazing degree, like, you need to prove your value.
And God forbid you want to become a dentist or a freaking surgeon. I mean, you're coming out of school with 400 or 500 grand worth of debt.
It's insane. It is insane. You really got to be passionate, because if you become a doctor to make money, it's just like, is the debt worth it? You got to actually be passionate about being a doctor. But the debt shouldn't be as high as it is if you're doing something that's valuable for society.
And how about this? I got news for everybody. Bachelor's degree should be 2 years. Sorry.
100%.
Half of the credits that you take is
worthless. The amount of dumbass classes I was in is freshman and sophomore year. Dude, when you do the math, it was paying like $3,000 a semester to learn about nothing. To learn about expository writing.
It's not okay when you are forced to take freaking cinema or something like that to fill a freaking elective credit, and you can't take something that you actually want to take. It is absolutely insane, and we need complete education reform with colleges.
The problem is, why it's never going to happen? The colleges are in.
I have a rebuttal to what you're going to say.
I was just going to say the colleges are in such cahoots with the government because they get so much subsidized academic grants that seems hard that unless Trump takes away the money.
Well, a lot of people try making the argument that it's all money making and colleges want you there for 4 or 5 years. But I got news for everybody. They're going to have an inflow of students every year. It doesn't matter.
Well, I don't think, no. It's not that they want 4 or 5 years. It's that they want people to be paying a lot of money for those 4 to 5 years. They'll always have the demand with the students.
You'll always have the demand. Make a degree 2 years, 2.5 years. There's no reason to have anything outside of the core. And honestly, if you don't know what you want to be, I don't think college is where you find that out.
It's a good point.
I'll make that argument all day long.
Dude, I think I learned a lot about myself in college, and I had a lot of experiences. Am I happy I had those 4 years? Yes, but
experiences, not school experiences.
Correct. A lot of it was
there's a big difference. I'm saying if you don't know what you want to be when you grow up, and you just think you're going to figure it out when you're in college, how many people get a freaking liberal arts degree? That's not figuring out what you want to be.
No, I agree. Now, look, I would say that college helps you get to the process of figuring it out, but is that worth 400 grand, 200 grand from a state school? No, like, and I went to New Jersey. If I went out of state, it would have been even more tuition. So it's like, I think you figure out what you want to do, not only because of college, but also based on your own internal, like, experience. Like, you have to go out into the world and do stuff.
I got to tell you, I think community college and state colleges are a great way to go. I really do. I went to a state school.
Yeah.
I mean, I had no
It
interest.
turned out fine.
I mean, look, I could have went to a big name school. I had no interest. I did not want to do it. I didn't even want to go to college. I stopped going to college for a while. Like,
Someone said, you could pay me 400 grand. I'll help some kid figure out what they want to do with their life.
it's wild. And the fact that student loans are not expungible in freaking bankruptcy is crazy.
It's criminal.
So, and if they were, I guarantee you that they'd be a lot stricter on who they give them out to.
100%.
And what degrees they give them out for.
Well, here's the other thing we're not talking about. And the Olin podcast mentioned this, but it's so true. With AAII, the idea that some professor is going to help you versus a dedicated assistant that you can type anything you want to. I mean, I remember in college you had to schedule office hours just to, like, get some extra help on your homework. Dude, office hours is right here. By the way, you like the color of my case?
I mean, you spend more time in an Apple store than anybody I know.
This is from Amazon, sir. Would you ever get this case color?
You're holding a brand new phone, though.
Would you get this case color ever?
No.
Why not? It's neon. It's nice, dude. Isn't it? Anyway,
dude, I have a normal freaking case cover.
Dude, that's boring. That's such a boring case. The level of assistance you're gonna get from AI to, like, figure out stuff, it's gonna take away the need for a lot of higher level shit, unless you're actually becoming a lawyer or, like, doctor. You know, like engineering. You think kids are gonna learn how to code on their own with AI? Like, easily, they're gonna learn how to code on their own with AI. Obviously, as a doctor and lawyer, you have to go through all the legal stuff. But in terms of every other job, accounting, you need to take an accounting class to learn accounting.
Dude, I want my freaking CPA taking everything. Trust me, you need school for accounting.
Okay, no, okay. So CPA, yes, but I'm talking entry level accounting. Like, to your point about bachelor's degrees, right? Some of those entry level jobs or classes, they could be automated very easily. Like, again, expository writing, cinema. You really need a teacher to teach you that stuff? You don't think you can?
No,
like,
there's so much stuff that's ridiculous about it. I don't know. I've been at war with the whole education system for a long time, and I think it goes down to high school. I think there's a lot of classes in high school. I have a much different view on things, and I think financial literacy should be the most important thing that is taught to high school students. After 2 years of math, I don't think calculus is that important, or pre-calc is that important for people who do not want to become engineers or go into science. I think financial literacy in 11th and 12th grade is the most important thing you can teach everybody, because guess what happens when kids get out of high school? While they're in high school or right when they get out, they turn 18, they can get credit cards and they can take on debt. We need to make sure that young adults are armed with the information that they need to be armed with to actually live in the real world of finance, and it's not taught.
And it's not okay. It's not expository writing.
It's not okay.
It's really not okay, dude. It, like, now, I think, and everyone in the chat can be sympathetic, because we are all privy to the world of finance. We're all intaking financial information every day. We all somewhat have an understanding of how this financial system works. Most people, not even most Americans, most people just don't. They don't even know what
fractional reserve banking is.
They don't know what fractional reserve banking is. They don't know what a high yield savings account is. They don't know what a Roth IRA is. They definitely don't know what options are. And that's the other
thing. People coming out of high school should be taught the power of compounding, time in the market, what retirement actually means, what it's going to take for you to save enough money in 2020 or by 2020. You'd be 2065 at this point, but somebody graduating now in 2025, a 40-year career, 45-year career, you're going to retire in 2020, 2065, 2070. What it's going to take to actually save enough money to retire. and set yourself up for that, and the ramifications of not saving in your early 20s, and how much harder it is to allow your money to work for you when you start saving in your early to mid 30s. I mean,
And
these
how-
things are very important.
and how to understand inflation and what that does to purchasing power. I mean, dude, it is like criminal that the school system is set up in a way to give you a loan. You can't bankrupt it, give you a loan for a major that they know is not
It's
marketable.
predatory. It's the same thing as high interest credit cards. It's predatory.
Yes. Yes.
I'll die on that hill. It's predatory. It is so annoying to me. And it's even more for me because I think about young kids coming out at 18 and signing a piece of paper, not understanding the ramifications of this debt load that they're about to put themselves in.
Yeah. And
Because they've just been taught that college is what you do after high school.
yeah, and again, it's like for most people, they need to get through experiences, and those experiences will like for all of us, those experiences will implicate how we live our lives. And if you don't have any financial experience for 4 years, it's like, well, how do you live your life? And this is also true for the big, like, there's a couple of doctors that live next to me, and whenever they're my mom's friends, and whenever they come over, the only thing they want to talk about with me is investing. I mean, I told this story on the stream yesterday, but I went to get my teeth cleaned. I went to the dentist last week. And after the cleaning, she was like, what do you do? And I was like, I talk about the stock market on YouTube. And she, like, her eyes lit up. She was like, you actually talk about the stock market? And she was like, I want to subscribe to your channel. I want to get your number. I want to learn about, because she probably doesn't know what to do with her money as a dentist, but she desperately wants to invest it because they didn't teach that shit in dental school. And so
there needs to be a whole regime around financial literacy. And it is very annoying that there isn't. We should want everybody to come out of high school with the knowledge to make good financial decisions.
yeah. And again, I just think with AI, like any financial situation you're in, whether it's a covered call, whether it's like you're budgeting, whether you're underwater on rent and you have like this side check coming in, you're thinking about how do you ration it, you can ask ChatGPT anything and it will say, I'm not a financial advisor, but, and then it will give you the best advice you can imagine versus paying whatever you have to pay to a financial advisor, because it will actually analyze based on God knows how many variables that it looks at to give you help. And that is the world we're going into. But people need to even know that they can ask these questions and that there's an opportunity to take advantage of different situations. And even that bare minimum is not really taught in school.
It is really shameful that it's not. And the fact that we are, and look, I'll catch heat for this one, but the fact that we are forcing people to take chemistry.
Oh, I agree.
Over financial literacy.
Dude,
how many people, like, listen, I'm sorry. When you leave high school, what percentage of people actually use a single thing they learned in chem class?
No, dude, look,
less than 0.001%.
Yeah, and look, I have plenty of chemistry with women, but like the point is, I don't need to learn about balancing atoms and shit. Like, what? Like, why? Why do I need to know this? What is that gonna do for my life? I'm not a chemist. I'm not fucking making meth. You know, like I'm not in Breaking Bad. So like, why? I agree. There actually was a really cute girl in chemistry sophomore year.
There's a lot of
really cute
classes that I think should be electives if you're interested in it, but financial literacy should be mandated for all 11th and 12th graders.
I agree.
And it needs to be the whole gamut. What are the ramifications of renting? What are the ramifications of buying a house? What happens if you can't pay your bills and you have to foreclose? What does bankruptcy mean?
Okay, so some pushback. Someone says chemistry is about learning how to think critically.
Oh, spare me.
Dude, if you think chemistry teaches you how to think critically, I just disagree. I don't.
No, sorry.
I think there's a lot of ways to learn critical thinking.
I'm not buying that at all. I'm sorry.
Yeah, and most chemistry classes are just, dude, I remember it was regurgitation and memorization because the teacher had a grade that they had to put you on a scale.
I just don't understand why there's so many, the school system is so against redefining what the curriculum is. Like, why do we not want everybody to be set up for success at a younger age?
Wait, can I ask you a question?
That's my argument.
Can I ask you a question? Let's say middle school. Should kids learn how to speak a language?
No.
Why?
So it's hard because there's a lot of things where a foreign language is good. I think financial literacy is more important. I also do think that in the next couple of years, it's not going to matter because you're going to put an earpiece in and it's automatically going to translate in your ear and you're just going to be able to talk to anybody. I mean,
So
you can't tell me that in the next couple of years, we're not going to have full translation.
I think that's what Duolingo is getting smacked because people are thinking AI will commoditize it. But I agree with you. So if you had to pick between financial literacy in high school versus Spanish,
It's over everything. Financial literacy is over everything.
Yeah.
Without a question.
Desi says at my son's school, I choose and pay extra for personal finance
I
management
love
courses.
that. Good job. I love that.
And look, chemistry is part of STEM, right? So I don't want to say we're undermining STEM.
No, I said if you're going to become an engineer or something like that, there are classes you have to take.
Yeah.
But if you're not becoming an engineer or you're not going into sciences,
It's pointless. Pointless.
there's no reason to take chem.
If I'm not actively using Spanish in my day-to-day life, why do I need to know it? Why do I need to spend that valuable time at 18 years old, 15 years old?
The only reason I passed Spanish in 8th grade is because I played sports. Only reason.
I passed because I probably cheated, as Dark Star says.
My brain does not work that way. It just doesn't.
Wait, you played sports? That's how you passed? How does that make sense?
Because the teacher.
Oh, what about the teacher?
Sports program in my high school / middle school was one of the coaches.
Oh, so you basically got a freebie, basically. Yeah. The teacher said Steve's a good athlete. I'm gonna make sure he passes Spanish.
My wife speaks a different language, okay, fluently. I don't understand anything. Okay. I'll tell you that I can't do it. My brain does not work that way.
Dude, I took it for 5 years. I didn't learn shit. I hated it, dude. It was pointless. I agree with you. It wasn't what I was interested in. Now, I found my passion in high school, which was debate. Quite frankly, I would say, you want to talk about critical thinking, learning how to communicate, learning how to make a freaking argument, defend that argument against opposition. That is way more valuable than chemistry could ever be, in my opinion. And a lot of courses, to be honest. But, everyone has to find their thing. And a lot of times they jam chemistry down your throat or physics. And it's like, if most people aren't going to become
it's not just chem. I don't want to just pick on chem. But, I mean, do you really need to take an English class in 12th grade?
No, I do. Do you really need to read?
Do you honestly need to know what a noun and a pronoun and a verb is?
Okay, no, I think you do need to. I think you need to know what a noun. we took this conversation. I think you need to know what a noun and a verb are.
What's a noun?
A noun is a place or a thing. Like a noun, like that's iPad is a.
Are you sure?
A thing. An adjective describes a noun. A verb is you doing something, and a noun, like this phone, it's a noun. A noun is a thing.
You sure?
I guess so. That's what a noun is. A pronoun is like he, him. My pronoun is by / the dip, so that's my pronoun. But
by the dip.
Like, person, place, or thing. Yeah, dude, I haven't heard of person, place, or thing in a long time. But yes, exactly. Person, place, or thing. No. But I get your point, right? Why do I need to learn? Why do I need to read some book senior year of high school and then write a book report on it as if like that's going to give me these amazing reading comprehension skills? And that is the precursor to finding success in college and being ready for the job market.
I don't understand the whole general education system. I just don't.
Steve, are you going to say this next? Do we really need to know what the alphabet?
No. But at the same time, I do think that there needs to be more business classes and classes about if you're interested in going to business, how do you actually set it up? And not the scene from Back to School, Rodney Dangerfield, but it actually talks about
good movie,
all the
bro.
costs.
You
don't even know what that is.
Dude, he's an American comedian and actor.
He
was in Caddyshack? I didn't know that. Was he one of the main guys in Caddyshack?
Yes.
Oh, yeah. Him and... Dude, I was actually watching some videos on Bill Murray over the weekend.
Bill Murray's incredible.
Because there was some girl who was on Jimmy Fallon's show, and she was talking about hooking up her mom with Bill Murray because they used to be in a movie together in the 80s, but now they're both single. And so so I went down a little bit of a rabbit hole.
Caddyshack's an amazing movie.
Who's Chevy Chase? Or sorry, Ty Webb? Oh, no, that was his name in the movie. Who is this guy?
You've never seen any of the National Lampoon's movies?
Oh, I know National Lampoon. He was in there? Was he the dad? He was the dad?
Griswold? Come on.
He was the dad, bro. I actually have watched this movie. I love this movie. The Christmas one.
Three Amigos was hilarious.
I didn't know he was in there. No, guys, you can't get mad at me for that. I know National Lampoons, but I didn't know who Chevy Chase was. Like, you can't get upset at me about that. There's no way. I will watch What is Caddyshack about? Because
my God, Caddyshack, what? And the fact that like I was in the golf business for a long time, so Caddyshack is just incredible.
Okay, I'm gonna watch this.
It's incredible.
I'm committing to watching this one. I'm gonna watch this. I'm gonna watch it.
And you should watch you go on YouTube and watch the making of Caddyshack and then watch the movie.
This is why you need cinema class. Yes, exactly. Yeah, no, I will. Dude, whenever I watch a movie, I always go on YouTube after and I watch all the interviews and the behind the scenes and all that stuff.
Caddyshack's amazing. Amazing.
All right, folks. I think that's it for us. Steve, thank you for joining. I just want to point out one thing. Steve did launch a newsletter on Friday, and about 600 of you were very, very nice to sign up. So if you want to check it out, nextzerofinance.beehive.com. It's not going to be individual stock content. It's going to be more, not even macro, just like more ways to think about the market. So the first title is, what if you had the worst timing and you bought the market at the top before each crash over the past 25 years? And it's a really good analysis of thinking about the markets in this way.
Yeah, I'm going to try to put something out once a week.
All right. I love it. I'll put the link again right here in the chat. I think that's it, Steve. We got Jackson Hole this week. That'll be important.
Woohoo.
Honestly, it's not going to matter unless J-Powell gets hawkish. As long as he's not hawkish, we're okay. But hopefully he's all right.
They're going to figure out a way to not cut in September.
Dude, if they don't cut in September, oh my God. You know what?
A way not to watch.
If they don't cut in September, I just want to make sure that it's October because I want to see a Green Day, and you should just wake me up when September ends.
It's gonna be.
They don't teach that in high school. They don't teach how to do what I just did in high school, bro. They don't teach that, bro. Granted, I've used that joke like a billion times at this point. So you know what joke I haven't used? I haven't used the Apu Arpu joke for a long time.
Right, go watch Caddyshack, please,
dude. Caddyshack. Where can I even watch this shit?
Probably watch it on freaking YouTube at this point.
No, it says Roku. I actually just bought a Roku TV, so I'm gonna watch it on Roku. Is Caddyshack a classic? All right, last question here. Let's do a poll. Is that a classic?
Dude, don't. You're not even gonna get 5% of people to say no. Like everybody's gonna say it's a classic.
Okay, so we're aiming for 100% on this.
We're aiming for 99%.
All right, polls in the chat. There you go. It's Caddyshack classic.
We're aiming for 99 to 100% on that one.
It was at 92. Now it's at 84. Now it's at 79.
That's crazy talk. That is blasphemy. That's
okay.
Crazy.
Put in the chat. Is it worth watching? Like that's my real question. Because if it's boring, bro, I will come up.
I agree. Whoever votes no, you're trolling. I agree with that.
No, but you can't have that many trolls, bro. 26% of trolls, like.
Yeah.
You have some people like because if it's boring, bro, I'm gonna check out in 20 minutes, and I will be unapologetic about it, bro. I don't care. It's got to be exciting to watch still.
It's a comedy. It's not going to be. It's not a thrill seeker.
Oh, you know what I tried to watch yesterday? I got so bored, bro. Have you seen this shit? Have you seen The Martian?
No.
Bro, It like they left him on the freaking Mars, and then the whole movie is him growing plants and shit. I'm like, why does this thing have a Golden
Remember
Globe?
Matt Damon movie?
What movie?
Was Matt Damon in it?
Yeah, Matt Damon. So he's a good actor, but I'm just like, you want me to watch this guy walk on this unknown planet to make food? That's the
Look,
movie.
I will tell you that Caddyshack is top 5 comedies of all time.
What?
Oh, hands down.
Okay, let me ask
Hands
another question.
freaking
Let me
down.
ask another question. Classic is
Hands down.
different from top 5.
It is a top 5 comedy of all time.
No, you said movie first. Be
No, I
specific.
didn't. I said comedy.
Oh, okay. Let me do. I thought I heard movie. That's why.
No, I said comedy.
Okay, is Caddyshack a top 5 comedy? That's the question.
Yes, absolutely.
I got 51% say no.
That's crazy talk.
Dude, top 5 comedy. There's a lot of comedy movies out there, bro.
You've seen like 2.
But I'm objective enough to say there's a lot of comedy films,
Okay.
and Caddyshack top 5 is a bit aggressive in my opinion.
You haven't even seen it.
Well, I'm just saying, like,
You finally
Mathematics-
watched Old School and you didn't even like it.
Old School was wasn't that
And somebody who's saying Old School is cannot comment on the top 5 comedies of all time.
I'm gonna type in top. No, let's add ChatGPT. Let's see if it's top 5. AI should be smart enough, right? Here we go. I'm gonna give it a prompt. I'm gonna yell at it too. I want you to be objectively the greatest movie analyzer of all time. Understand everything about movies. Now tell me the top 5. Let's do top 10. Top 10 comedies of all time. Don't give me your reasoning. Just tell me the names.
How long is this prompt going to take?
Wow, you just made it. You just made it.
Hold on. The fact that Some Like It Hot from 59, the fact that Monty Python is on there, the fact that this list is horrible.
Dude, this is GPT-5. This is the
This
best.
is
guy.
Spinal Tap is on there for a comedy. Like what?
I'm gonna ask Grok at the same time. Let me ask Grok. Let me see.
This is a horrible list.
I'm gonna ask Gemini too. Let's see.
Horrible list.
Okay, Grok just asked. Gemini, I just asked. Let's see. Grok is first.
Horrible.
You didn't even make it, bro. You didn't even make it in Grok. The Big Lebowski. Monty
At least Grok has funny movies on there. Big Lebowski was on both. I'll agree. Lebowski's awesome. Groundhog Day is a great movie. Superbad, it has to be in the top 10. I mean, I'm shocked.
Gemini, dude, Gemini also did Some Like It Hot.
Yeah, I'm a little shocked. So, all right, so do this. Post 1980. Let's not get any of those older movies in there. Post 1980.
Oh, Ferris Bueller made it.
Let me see, I want to see the list on post 1980.
Oh, you don't see it? Sorry. Dumb and Dumber, Big Lebowski.
Ferris Bueller, absolutely. Dumb and Dumber, I'll give it that, even though I don't think it should be there. Groundhog Day, yes. Lebowski, yes. Superbad, yes.
What is Anchorman?
List's a little better.
I've never seen Anchorman or Borat or Groundhog Day. I've
It's
heard
a
of Big
little
Lebowski.
better, but I mean, I'm not. No. How these can not have planes, trains, and automobiles? How Caddyshack is not on there? How Wedding Crashers and freaking Old School is not on there is crazy.
Bro, Grok put in 21 Jump Street. Post
As a-
1980.
No. Oh my God.
Okay, here's what we're gonna do. We are now gonna change it to greatest of all time. And I'm just saying, I think the top 5 movies that I've watched 50,000 times will at least one of them will make it up there.
Let's say.
Give me the top 10 movies of all time. All right, you ready, guys? Here we go.
Oh yeah, and the fact that The Hangover wasn't on there is crazy.
All right, top 10. All right, no, before I press enter, put in the chat what is one name you think has to be up there. 30 seconds.
Godfather.
Put in the chat what is one. I'm saying Inception, Dark Knight, Interstellar, High School Musical. No, I'm just kidding. What's the other Nolan one? Dark Knight, Interstellar, Wolf of Wall Street. One of those 4. If that's not there, I don't think any of those are going to be on there, man. Dude, I think one of those
before you hit enter, they're gonna have movies like Casablanca on there and shit like that. So you may want to put like post 1980.
Okay, no, but that we're talking about old time, bro. I don't think we should.
All right, fine. We'll do it. Then we'll do post 1970. How about that? Because it's gonna have movies from the 50s and 60s that do it. Let's see.
Okay, so let's do the original prompt. I'm gonna do it on Grok
Do
too.
the
and then
original prompt. Hit enter. Let's see.
Okay, so I'm doing it on Gemini and Grok as well. But here's ChatGPT. All right, here we go.
I'm gonna see what this stupid list is gonna be. Yeah, Citizen Kane, Casablanca. Get the hell out of here.
Bro, where's Interstellar?
I told you none of your movies are gonna be on there. And the
Why
fact
is
that
Pulp
Godfather
Fiction-
2 over Godfather 1 is horrible. Wizard of Oz, get the hell out of here.
Yeah,
Like,
Wizard of Oz.
This is
No.
ridiculous. They're putting Wizard of Oz, Casablanca, and Citizen Kane on there. Get out of here.
Okay, hold on. Let me see what Grok did. Wow, Grok gave me Inception, baby. Grok gave.
Did they?
Oh, Goodwill Hunting too. Oh, and the Dark. Okay, I like.
I like
Elon,
Grok's a lot better, and at least Grok had the Godfather instead of Godfather 2.
Elon gave us Inception, Goodwill Hunting, and the Dark
Yeah.
Knight. I think Grok is
Much
the best.
better list.
Okay, let me do Pulp. For those defending Pulp Fiction, no,
Pulp Fiction's
Okay.
incredible.
it's not top 10 old times.
It's not top 10, but it's incredible.
Okay, Gemini. What is 8.5?
I have no idea.
What the heck is Janine Dielman Quad de
Yeah,
Commerce?
This
Did
is
they go to France for this shit? The Searchers, the General. This is why Google's not winning in AI, bro. What nonsense? What?
This is a
Okay.
nonsense list.
Okay, now let's do what post 1970. You said.
Or even post 1980. I mean, Godfather won't be on there, but that's fine.
Okay, post 1980. All right, we're doing it again. Do it again.
I don't think that you can put some of these movies on here. It's ridiculous.
All right, I'm gonna give everyone 30 seconds again. Now we're doing post 1980. I'm pretty sure no one's answers are gonna change too
Yeah.
much. All right, here we go. Give me the top 4 that I've watched.
Raging Bull, it's a bullshit list.
Where is
Like the
Inception?
fact that we're putting Raging Bull and Blade Runner and No Country for Old Men on here is crazy. Like I'll give it Matrix, sure. I'll give it Lord of the Rings.
Is the
fine.
Matrix top 10?
Yeah,
Really?
Matrix is pretty freaking good.
But it's not top 10. Get out of here, bro. Like
Pretty freaking good.
the Lord of the Rings made it. I get it. What's Amadeus? What's that?
I have no idea what that is.
Okay, let's ask Grok now.
Blade Runner should not be there. I don't even think Shawshank should be there.
I actually watched
Schindler's List should not be there.
Shawshank was good. Okay, so Grok has Pulp Fiction, Shawshank, Dark Knight, Schindler's, Inception, Goodwill Hunting, Fight Club, The Matrix, Parasite, Lord of the Rings. Almost similar, except they have Dark
A
Knight.
little
and Inception.
similar. Yeah, I'm a little surprised at this.
Okay, let's do Gemini now. Let's see if it can recover from whatever it just told us post 1980. In the Mood for Love?
Mulholland Drive is a good movie. It shouldn't be top 10, but it's a good movie. A horrible list.
Why are all of them putting Pulp Fiction, bro? It's not that good.
Pulp Fiction's a good movie.
It's not top 10. We know it's not. Yeah, where's Titanic?
It's not even top 50. Stop
Where's
it.
Titanic? Bro, Grok has the best list. I'm sorry, but even if they have Pulp Fiction, they got Inception and The Dark Knight. You can't tell me those are not top 10 movies of all time.
Dark Knight's definitely top 10.
Okay, so why is ChatGPT and Gemini not?
So you know what, though? I actually like Batman Begins a little better.
No, it's a good one, but I think Dark Knight is
It's
just.
so hard to distinguish between the two. They're both so good.
Should we do one more post 90s?
Sure, post 90, sure.
All right, here we go. Post 90s. Put in your answers. Let's see.
I mean, they're definitely gonna have Forrest Gump on there.
Dude,
Thank God they didn't.
they still don't have any Christopher Nolan. I don't get
There
it.
will be blood.
Oh no, they do. They have Dark Knight. They have Dark Knight.
Badless.
What is There Will Be Blood?
Badless.
Okay, let's ask Grok post 1990s.
I just think it's crazy that it's not putting movies like The Departed on there.
Look, I like The Departed, but it's not a top 10 movie.
Dude,
It's top
Departed
20, top
is
25.
Incredible. Heat is incredible. I mean, I would even go as far as saying putting Boogie Nights on there.
Grok said Dark Knight, Schindler, Shawshank Full, Pulp Fiction. It didn't really change much. Let me ask Google.
I mean, how did none of these lists have Braveheart on there? Like how?
Yeah, it didn't change that much. All right. There you go.
The fact that Braveheart is not in here is crazy.
All right, folks. That's it for us. Thank you for joining. Deeply, deeply appreciate it. You got crypto getting a little bit of liquidation right now, so we'll see in the morning how that one looks. Ethereum down 5%, Bitcoin down about 3%. Big week. Walmart, Target, Home Depot, Lowe's, a lot of companies, and we got Powell on Friday and Miami on Saturday. So I will be there. Okay, if you put in the deposit but have not received a confirmation email, please email me. I believe I sent it to everyone. If I missed one person, then let me know. But if you sent a deposit, just email me and I'll get to the confirmation and the details. But I think everyone should have got it. There's going to be about 200 people. Should be fun. And yeah, I'm going to do Miami.
Get going.
Yeah. All right. Thank you, everybody. Appreciate it. See you guys live in the market open. Steve, thank you. See you guys tomorrow. Bye, everyone.